Us. Let us begin. See here. Listen. So in the today's session, hey, listen. In the today's class, we are going to start with next concept in the dividends chapter called as dividend discount model with two stages. With the two stages. Online students, please confirm whether audio and video both are clear. Both the YouTube students as well as the Zoom live. Confirm whether the audio is clear. Live students. Okay. Let us begin then. See here. Important concept again. Not complicated like Modigliani Miller. ரொம்ப simple concept, but new segment, complete new learning will be there. So make up your mind to learn some new things in this particular segment called as dividend discount model with two stages. This is also called as two-stage dividend model. Also called as what? Two-stage dividend model. Very popular in CA final. Popular and normal popular. Last attempt also question came in CA final. Last attempt, the toughest paper in entire AFM history. In that paper also, two-stage dividend model came for 4 marks. There is different name will be given. They call it H model. So anyway, for us it is there. We have to study that. See, what is this two-stage dividend model? This is time horizon based model. Question will come. What is the time horizon based model? See here. Class started just now. Everyone, keep your mind on the screen. Stop using mobile phones in class. Can we begin? See here. Time horizon based model. What does it actually mean? See here. There is an investor. This investor wanted to invest in the shares of a company. Always remember one thing. Whenever any person invests, they don't invest for perpetual period. Though life of share is perpetual, they don't want it to stay perpetually in the company. Say example, a person is, let us say, born in 1940. Say example, on an estimate basis, he can live till 2015. Say example, 75 years. A decent life expectancy in India. A company is there which started in 1904. Even in 2026, it is there. But this person is not there. Simply to understand, he came in the middle, he went in the middle, but company is still running. The company name is Tata Iron and Steel Company Limited. Understood the point clearly? Tata Iron and Steel Company Limited. This is some investor, some example, some investor, Mr. X. Okay? From this, what is the logic that we need to understand? Life of company is perpetual. It will run forever like that till you wind up. But human being life is not like that. Now, investor will live for some number of years. Sorry, even if investor live for some number of years, from birth till death, he can't invest enough. Answer. Therefore, understand one thing. If you become a shareholder in a company, there is no need that you should be there till winding up of company. You can buy today, sell tomorrow. Correct? You can buy day after tomorrow and sell next Monday. So, problem is not about the company, problem is for the investor. Investor should have a clarity in his mind. How many years you wanted to stay in the equity market? Debentures ki, preference shares ki, this problem won't come because company will tell redemption period. Have we done debentures or redeemable debentures? Answer. Have we done redeemable preference shares? N is there. RV minus NP by N. We will write in the formula or not? N life of what? Life of the person who purchasing it. Life of the bond. Answer. Life of the bond is the N. 5 or 7 or 10 or some number they will give. Problem doesn't come with fixed income securities like bonds and preference shares because life is already given in the document itself. You will take a loan from a bank. You will take loan from for perpetual period, for a specific period. I take a car loan, 5 years. I take a housing loan, 20 years. What is there? Specific life is there. So, person has a clarity. How many years I am going to stay inside that? However, when something is running till perpetuity, it becomes difficult to quantify its life. Okay. So therefore, what is the point here? Try understanding like this. Equity share has a life or perpetual life. Certain specific life, not certain life. Certain, uncertain. Certain, uncertain. We don't know. When we don't know till when company will be, I can't wait till the company close and stay. Therefore, equity loan, this problem will come. Whenever you are investing in the shares of a company, you won't continue till perpetuity. You will purchase somewhere and you will sell somewhere. That means every investor in the equity market will have time horizon. Their name. Every investor in bad response. Again, mind is absent. Absolutely, I'm true. Tell me what I said, what statement I said now? Every investor in the equity segment will have. Only a fool will enter by purchasing without knowing when to sell. Means whenever a person purchases equity share, there will be intraday traders. Which trader? Intraday. Morning they will buy, evening they will sell. These people are called as intra traders. These people don't work on price movement. These people work on volume movement. Means what? They will enter into the market with 1 crore rupee. They will enter into the market with 1 crore rupee. Even if they get 1 lakh extra in that 1 rupee, percentage of return may be 1 rupee only. But one day 1 lakh they got. Understanding? Say, price today is, say for example, 250 per. Let's check round number for understanding. 1000. 1000 increase to 1005. Great increase, a very less increase. 5 rupee increase, that's all. And if a person who invested 1000, if you ask him what is the only movement, 5 rupee. If a person invested 1 crore, he will get 5 lakh rupees. 1 crore he will get how much? 5 lakh rupees he will be investing, or 10 lakhs he will get 5 rupee investment profit. So he will be getting a more gain. People in the investment market will always see the volumes in intraday. Morning they will buy at 1000, evening they will sell at 1005. How much is a percentage return? 1005 minus 1000 divided by 1000 into 100. How much percent return? See, 1005 minus 1000 divided by 1000 into 100. How much percent? 0.5%. Not even 1% gain they have got. But that is for year, 1 day. Into 365 you do 182% return he got. Do you understand the point? Until if he can do that every single day, how much return he will get? 182% return. Which markets will give 182% return? Those people are called as intraday traders. Which trader? Intraday traders time horizon will be how many days? 1 day. Morning, evening. That's all. Morning they will buy. Evening they will sell. Understood? I used to do once upon a time. Now not doing because of classes. Intraday if you have to do now, you should watch the market all the 6 hours. Trading hours it starts at 9:30, 10:30, 11:30, 12:30, 1:30, 2:30, 3:30. 6 hours. Then 6 hours I should sit before the monitor. I should see what is happening. One time the price will increase, immediately we should sell at that time. For that I need to watch the market every single minute. Then once upon a time when I was having only online, COVID time I'm talking about especially. At the time I used to put one very big monitor in my room. I used to sit there. Even if I take classes here and there, I used to see that. At that time it worked. But later when I was taking classes in Chennai, physical classes when I was taking, I am not watching the market. Every day I am entering into losses. At the right time I could not sell. Daily there is some resistance level. These have crossed. Hammers have come. Some green borders it reached. But at that time I was talking how to make profits in stock exchange in class. Other side around I am making loss. The problem, that's why we should stay aware every single minute when you are entering into intraday. Like completely for last 3 and 4 years I never did intraday. I made a lot of investment but never entered into intraday again because I am losing money consistently. For 15-16 days I lost money. I decided, okay, this is not my game because you should be vigilant. 100% you should see the market every single day, every single minute, if not wrong, which I cannot do with these commitments. Why I am telling you? As an intraday trader, my time horizon is 1 day. Yeah. Like that. Investors will be there. Intraday people are called as traders, not investor. I am not investing on anything. The investment means 1 year it should be there at least. Correct? Then only your investment generates return. I want to get dividend. When you will get dividend? Year beginning, year ending. And you should wait for how many years? 1 year for getting return on your investment. So tell me, what is the difference between investor and trader? Trader trades within year. Investor invests more than a year. More than a year. More than a year. That's why Short-term capital gains are having higher tax than long-term capital gains. Government don't like short-term capital gains. Reason? You are just buying it, you are just selling it. You are moving with the demand and supply in the market. Government puts more tax on STCG. LTCG patience is there. Your money is blocked in the market. People can use your money for more time. If I put FD, my money will be utilized by the bank for at least 1,000 times. Correct? But if you put money and take money, who is using your money? Nothing. But you are making gain. Government don't like that. STCG, that's why tax rates are high. Discouragement. That's all. Simple. Understood? The LTCG residential properties, if you sell, much lower. 12.5 without indexation. How much? Meager rates, 12.5. Short-term capital gain 20. So, discouragement. Government don't want you to make like that. Just like that. Buy, sell, buy, sell, buy, sell, buy, sell. You should not make gains. Because your money is nowhere rotated in the economy. You're betting, that's all. It's a betting. Morning you are telling 1,000, evening it becomes 1,005. You are taking 5 rupees gain and happily enjoying with that 5 lakh. Sorry, keeping all government intentions aside, you understood the main subject. Traders are different. These models are for investors, not for traders. And none of our FM concepts are for traders. And traders, there are no concepts. Traders will take risk. Clear? Here we are doing risk management. Traders are ready to take that speculative risk. So for traders, no subject is there in our syllabus CA curriculum. Final, okay, at least there are chapters. Interlaw 100% we are talking only about whom? Final, there are good amount of concepts like derivative, Greeks, risk management, value at risk, trader or value at risk. So many trader concepts are there at final level. But inter level, there is no concept of trader. Everything is talking only about whom. Means a period of time will be less than 1 year, more than 1 year. Okay. Tell me, every investor entering into the market will enter and wait till perpetuity or will have a time. Which time will be there? Exit. So every entry has a exit time also. Now listen carefully. Concept, if you have to understand it clearly, then only you can appreciate how these concepts are working. Multiply Miller, how you listened yesterday. Comfort zone, you will see when you do the problems. Correct? Same. Understand the concept, problems can be solved in no time. Here is great. There is an investor. That investor took an entry today. He wanted to stay for 5 years. He wanted to stay for 5 years. Tell me, if I invest in the share today, wait for 5 years, every year what I will get? First tell me, year 1, year 2, year 3, year 4, year 5. Tell me, what will I get today? What I will do today? I will sell or I will buy today. Loudly, outflow or inflow? What I will buy? Share today's price is called as what in our notation? Very good, super. What is the answer here? P0. I will purchase at P0. P0 is an inflow or outflow? Outflow. I will write it minus. Are you listening? Minus P0. Because this is an inflow or outflow? Inflow. Sorry, I'm very sorry. It is inflow or outflow? Outflow. It is a disinvestment or investment. I wanted to wait in the market for how many years? In these 5 years, what I will get? So I will get D1, D2, D3, D4, D5. And I will also sell at P5. Everyone understood the concept? Tell me, what is my time horizon in this question? How many years? Very good. Tell me, when I purchase? Today. Today is called as what? 0. At what price I will purchase? P0 or P0. Okay. First year, what I will get? D1. Second year? Third year, fourth year, fifth year, not just D5. I will get D5 and I will buy a seller. Inflow na outflow na? D1, inflow na outflow na? D1, dividend is an inflow of cash or outflow of cash? D2, D3, D4, D5, P5 I will sell. Cash inflow na, cash outflow na? Lovely. So that is again plus. Here minus, here plus. Hey, understood the concept clearly? Yeah. The share which I purchased 5 years back, I will sell it at P5 price. After you understood this calculation, listen carefully. My point is not about these. My entire question is on how much is this? Very, very important for the exam. I should not tell it is just important. Most important in this chapter, beyond Modigliani-Miller concept. Understanding the meaning of this P5. How this P5 has to be computed. See, listen carefully. P5 means what? Tell me. Price of today, na? Price after 5 years. Price of today, na? Price after 5 years. Making a projection when today itself we are projecting. First of all, answer my question. When I am buying the share, D1, D2, D3, D4, D5 are actuals are expected. Okay. And when I wanted to sell today, after 5 years, after 5 years, what will be the price? P1 or 2 or 3 or 4 or 5. That's what I am asking. Huh? Listen carefully. Generally, what we think, I will tell the answer, at least listen this way. You purchased a building, own building. You are not staying there. You are staying or not staying there. You are having residential property. There is a commercial property for you. You are giving it on rent. You are giving it on rent. So you gave the property to someone. From him, he will be collecting every month some amount. 30 or 40 or 1 lakh or some amount you are collecting. Why you are collecting that amount as a rent? Start again. Simple question again. You have a own premises, self-occupancy. You are also having a commercial establishment. Gave it on lease or rent, whatever. Every month they will be paying an amount. Why they are paying an amount to you? Simple question I am asking, you could not understand. Basic, very basic. You are having a property, 2 properties, one is self-occupied, one is a commercial property. This you gave on lease or rent to someone. Monthly they are paying some lease rental. Why you are collecting lease rental? Because they are, loudly, because they are, is a wrong answer. A finance student should never answer this. You are collecting rent not because they are using your property. You are collecting rent because you could not use the property. Do you understand the difference between both of them or not? Tell me what I said. We are collecting rent not because they are using your property. Because my property from me, you are taking and using it. As a compensation of using my property, I am collecting the charge from you in the form of rent. Understood? Now reverse case I will ask. Oh, 5 years or 10 years or over. I wanted to sell the building. I wanted to sell the building. At what price you will sell? Again I am asking a question. What is the first question I ask? You purchased the building, commercial property, gave it on rent. Why you are collecting rent? What is the answer? Generally what we will tell outside, because they are using my property. Because they are, sorry, I will ask in a reverse way. If you would have used it, you would have collected rent from you. No. Okay? Usage, if you have to pay the rent, if you use also, you should pay them. Do you understand the point? They are using it, that's why I am collecting rent, you said. If usage creates rent, if you use also, rent has to be created. But you won't collect rent from yourself. Na? So rent means how you need to understand different perspective of understanding rent. What do you mean by rent? It is a collection of money for using the property, for the owner for not using the property. That is the right intention behind the concept of rent. Rent is something collected from another person who is making me not to use my property. For that I am collecting. Now reverse case, can we see? Answer. I have a building. I wanted to sell the building. At what price I should sell? Everyone loudly. At what price? Market price. Okay? Wrong. Market price is a general answer. I am talking finance student answer. How you need to answer? Now, one second. If you sell property to some other person, if you sell, what he get, you forget. Previously also he is using, that's why I am correct. Forget about others. I am talking about you means you should tell about you. If you sell the property, what you will lose from that day? Ownership, okay. I am talking about finance, cash flows you are talking about legality again. Why law classes in FM? Start again. You are the owner. You are selling the property. Okay. If you sell the property, if you sell the building, from the date of sale, what you are going to lose? Loudly. If it is there with you, what you would have collected? From that day, for example, life of the building is 50 years. Life of the building, 10 years you occupied. For this you collected rent. How many years? Why you collected rent for the 10 years? Because the tenant made you to use the property or not to use the property. My property, I am not using, as a compensation, I will collect what from you? Rent. This is the right way of understanding the concept of rent from the point of view of finance. Second angle, I am not using the property as a rent. I am selling the property. I am selling the building. Okay. How many years I used for myself? How many years, sir? 10 years over. After 10 years is completed, 10th year I wanted to sell. What is the expected life of the building? Just now I said you forgot. What is the expected life of the building? How many years I utilized? At the end of which year I wanted to sell? 10th year I wanted to sell. If I sell at the end of 10th year, what will stop coming to me? For how many years? Every year rent will be same, or you will increase rent every year. All the cash flows you can estimate. The present value will become the value of sale at the end of 10th year, because you are going to lose rent from year 11 to year 40, year 50. And the year 11 to year 50, how many years is there? That 40 years rents you total, make it to present value by discounting. Whatever the value will come, will become the fair value of the building at the end of 10th year. Do you understand my point clearly? Yeah. Yes, so I will ask question, answer. Then I will really vouch for your yes. Start. Why rent? For using the property, for not allowing the owner to use the property. Rent is a compensation for not making you use your own property. It's a compensation paid. Number one. Okay, next. Number two. Second. I wanted to sell the building when today, after 10 years. Price at the end of P0, P1, 2, 3, 4, 5, 6, 7, 8, 9, 10. What is the value of any asset? Present value of 10th year. If you are selling, you don't want 1 to 10. You want future. Future for the building is from which year to which year? 11th year to 40th year. Every year, let us say you will increase rent by 10%. This year 1 lakh per annum. 1 lakh becomes 1 lakh 10. 1 lakh 10 becomes 1 lakh 21. 1 lakh 21 becomes 1 lakh 33. Like that 40 years can I have the values estimated? PV factor of 10% can I write for 40 years by taking calculator? If I total, I will get a fair value. That fair value is for cash flows from which year to which year? Year to 40th year. 11th year to 50th year. I'm very sorry. 11th year to 50th year. And how many years totally? 40 years. All of them, what you have to calculate? Present value. Present value will be calculated by compounding discounting. Loudly. What you will get? Fair value of the building. What you will get? Fair value of That price ki you have to sell that particular building at the end of now question, sir, then government will give market values. Market values will give, government will tell this property 1 crore, this property 1.5 crore, like that they will give. They give on this basis only. They will take a standard rent first in that locality. What they will take? Government on a god, or they came directly from Swargaloka to Bhulokama to calculate things. They are also human beings like us. Understood? So they also have the same logic. What they will take? There is one department called as the rent control department or nonsense department in India. So what is that name? The rent control department, what they will do, they will compute standard rent every year once. You go to the municipal authority there, housing authority will be there in Chennai, go there. Ask them, sir, what is the standard rent in West Palm? They will tell the standard rent. Whether your owner is really collecting the standard rent is not the question here. What is standard rent, they will tell. And in this locality, with this infrastructure, etc., this standard rent is 1 lakh per month. Like that they will tell commercial property. And what they will do, okay, if this is the situation, sale price, how much it should be, building ki general life expectancy will be there with the department. Generally, a building will stand for how many years? 40 years, maximum 30 to 40 years. Without any capital expenditure, we can withstand a building for at least 30 to 35 years in India. Correct? Because India is not having natural calamities, for God's sake. US are not like that. Natural calamities, the date of birth, place of birth. The USA, California side, Bay Coast, or Australia to the other side. The Pacific Coast, both are in extreme danger always because of heavy winds. India is a peninsular country, all sides continents are moving. So India, that problem never. India has natural calamities, but natural calamities generally come to us only through water. There winds, water, fire. Panchabhutalu, all the Panchabhutas will target on USA. So natural calamities, that's a care of address. Australia as well, Japan as well. But India is not like that. General life expectancy of building in India will be generally 30 to 40 years. That's why even when you are a kid, you might stay in one home. 20 years after you go, it will be like that. 30 years after, where I was born in Vijayawada, when at that time I saw a building. Not I was born in a different place. After that, when I was in kindergarten, we used to stay in one place. That building intact. One sticker used to be as it is, like that it is, even till today. So, India life expectancy of buildings is very much high. Simple science. Therefore, government what it will say, let us say a building in West Palm will last for 40 years. Last for how many years? Yeah? Let us say it lasts for how many years? So 40 years is the life of a building. How much rent can be collected in West Palm? They will tell. 5-story building, 5 into 60,000, 3 lakh rupees. 3 lakh. Next year they will raise to 3 lakh 30. Put in a Excel sheet, put a formula, drag all cash flows. Excel will give in 1 second. PV factors you take, drag, Excel will give. Compute, there will be one value. That value government will make plus or minus 5% adjustment and release it as a stamp duty value through a government order, GO. They will tell this year stamp duty value is this much. The government on a guard, that's what I said. Directly they won't give any value. They also do some exercise of working on this. So understood the logic, everyone? Now start. Don't give bad responses. When you are buying the building in this case, in our example, when you are buying the building today, buying the building and holding it for how many years? 10 years. Building example I said. Okay, in the building example, when I am buying the building today, holding it for 10 years, what I will get when I hold? Rent. Why I am getting rent? Because you are not using it and you are allowing someone to use it as a compensation for not using it. You are collecting what? Rent. So always consideration is paid for losing something or getting something. Getting something as per law, losing something as per finance. That's why there they call consideration. Here we call compensation. There is a difference in language. Hey, understood? Law, if you read Contract Act, what you will see there? You are getting something, that's why you are paying. Correct? Finance will not say that. What finance will say? You are losing something as a compensation you are taking. That's why even PV factor we call opportunity cost. You are losing something there. Clear? What is lost? We are asking as a compensation in finance. Finance is always about compensation for losing something. Concentrate and answer. How many years is the holding period of my building in the example? In the 10 years, what I will get? You are getting rent for not using the property. And others using your property, compensation you are collecting for not using it. Over. Up to there, everyone had a clarity, yeah? Now question, when I am going to sell? After, and I will sell at P 3 or 4 or 5 or 8 or 10. When you sell at 10, what you are losing? This finance is all about what? Getting something for that paid up, losing something for that paid up. Common sense. So 10th year you are selling means what you are losing? Rent for how many years? 40 years rent. And 40 years rent, can you expect something? That expectation can be brought to present value. That present value will be called as the fair value. That fair value will sell. Same logic, same concept. Apply on shares. Tell me. Now this example. I am buying a share when? Loudly. Today. Hold it for how many years? What I will get for the 5 years? D1, D2, D3, D4, D5. Don't tell P5. Dividends I am asking. How many dividends you will get? Tell me. Your money is with whom? Answer. My money, since I could not use it, I am asking compensation in the form of equity dividend. Rent type again same. My money should be with me, but my money is with whom? I could not use my money now. Blocked in company. Compensation, what you are going to pay me? Debt, I will give interest. Preference, I will give PD. More risk you are taking, I will give equity dividend. Logic understood? Simple logic. Okay. Now tell me. When I am buying the share, how many years I will hold? First year what I will get? Second year, third year, fourth year, fifth year. I will hold for 6, 7, 8, 9 till perpetuity. I will sell. Building case when you are selling? In this case when you are selling? Fifth year if you are selling, you will sell at P1 or 2 or 3 or 4 or 5. Loudly. If you sell the share today, what you are losing? Dividend from when to when? Building key or life is 40 years, 50 or 30 or, but share key life is known or unknown. Loudly. Tell me, I will get what? I am losing what? I am losing what when I am selling at P5? Which dividend? D6, D7, D8, D9, D10, 11, 12, 13, 14 like that till? Tell me present value of perpetual cash flows formula. Cash flows per annum divided by required rate. Cash flow per annum divided by? Tell me. Cash flow per annum divided by? What is the cash flow per annum given by a share? Answer, sir. What is the cash flow given by a share every year? You are losing dividends from which year to which year? 5 years. 6 to infinity. 6 to infinity. Therefore, you are using from D6. Divided by, you have to discount everything. K minus G. P naught equal to D1 by K minus G. P2 equal to D3 by K minus G. P5 equal to what? D6 divided by K minus G to grow. At this price, you will sell the share. This is how questions will come in examination. Everyone understood the concept clearly? Yeah? This is the conceptual understanding of two-stage dividend valuation model. Two-stage dividend valuation model. How it works, we will see with a good questions, so that we will really understand how the questions comes in exams as well. So let's start doing it now. Let us begin. All the students in live also please give a reply. Did you get a right understanding of the concept two-stage dividend valuation model? All the live batch students in YouTube, please give a reply. Have you all understood? Okay, done. Next, let us write a small notes on that, and then we will start doing the question. See, logic I said you theoretically, yeah. Problems, if you do 3-4 problems, you will do. Full clarity. Your doubt will not come. Write out. Point 1. Point 1. Every investor every investor will have a time horizon for his investment. Every investor will have a time horizon for his investment. Every investor will have a time horizon for his investment. Which means for an entry, there will be a predetermined exit period. For every entry, there will be a predetermined exit. What you have written, can you read out? No, last second line only. Predetermined exit period. Full stop. Continue. Predetermined exit period. Full stop. Continue. Return means cash flows expected as return means cash flows expected as compensation expected. What you have written, can you read out? Return means cash flows expected as a compensation. Compensation. I was answering him and I was thinking that one second, give the book once. Very sorry. I'm clarifying one doubt and as a compensation, expected second time you remove, as a compensation for not using the asset. As a compensation for not using the asset. For example, if a person purchases a building, for a commercial renting, the rent collected is a compensation for not allowing the owner to use his own asset. Compensation collected for not allowing the owner to use his own asset. to use his own asset. So normal situations where you can tell anything, you are using per square feet like this. See, all these things are simply to understand from the FM point of view. It's a compensation that is collected for not allowing the owner to use his own asset. That's why we are asking a compensation for that in the form of rent. Complete enough. Full stop. Continue. In the same example, continue. In the same example, if we wanted to sell the property at the end of 10th year, if we wanted to sell the property at the end of 10th year, if we wanted to sell the property at the end of 10th year, the end of 10th year, the price of the building at P10 should be, the price of the building at P10, what is P10? Price at the end of 10th year. The price of the building at P10 should be compensating the rents foregone, compensating the rents foregone, FORGONE, foregone means sacrifice, the rents foregone from year 11 to year 50, year 11 to year 50, bracket write down 40 years. Again bracket write, assuming life of the building is 50 years. Assuming life of the building is 50 years. Again write in the brackets. Again write in the same, again open the brackets and write down, with stable growth of 10%. With stable growth of 10%. Rent will not be same every year. Rent will be same or will be growing? Will be growing means what formula we should use? KE minus G should come. Okay, well, completed. Next point. In the same fashion, even in case of equity shares, in the same fashion, even in the case of equity shares, even in case of equity shares, the investor will have a predetermined time horizon. The investor will have a predetermined time horizon for entry and exit. For entry and exit. For entry and exit. Full stop. Continue. For example, if an investor invested in a company share today at P0, invested in a share today, if an investor invested in a share today at P0, he is blocking his funds with the company. He is blocking his funds with the company. And could not use it. Same like a building. And could not use it. Full stop. As a compensation, As a compensation, he expect dividend. As a compensation, he expect dividend. Okay, full stop, continue. If in the same example, investor wanted to stay for 5 years, if in the same example, investor wanted to stay for 5 years and sell the share at the end of fifth year, sell at the end of fifth year, it will be as follows. Write down a diagram. Hey, I did not give any break to you. Write down. Okay, everyone? Hey, up to here, have you written? Say, write down like this. I wanted to hold the share for how many years? 3 years, sir. Write down. Okay. I wanted to hold it for 5th year. I will get Everyone understood this diagram clearly, yeah? I'm talking to everyone, understood, huh? They will give D1, D2, D3, D4 like that to you in the question. Here also, hey, tell me, how many in our building example, how many years you are holding? Answer? 10 years, what you will get? Same rent, increased rent every year. With growth or without growth? With growth or without growth? Same happens also in company. During your holding period also, difference will grow. Shall we continue? Hey, have you written this, everyone? Let us start. Let us start doing the question on two-stage student model also. If you stop, I will discuss, please. See here. Almost everything is either Walter or Modigliani Miller. Every question you can see on the question bank. Either it is Walter model or Modigliani Miller. Two-stage student, till now it is not discussed in exam so much. But still, I hope they will be definitely testing two-stage student model at a high peak level in coming exams. Everything is either Walter or yes, two-stage model. See. See the question. See here. X Limited is a multinational company. Current market price is 2185. During the financial year, company paid 140 as dividend per share. Paid D0, D1. D0, D1. Company is expected to grow. See the screen. Company is expected to grow at the rate of 12% per annum for the next 4 years. Then 5% for an indefinite period. Return to the shareholders expected is 18%. Find out intrinsic value per share. Intrinsic value is a fair value. Fair value, another name is intrinsic value. Remember, intrinsic value or fair value both are same. State whether the shares are overpriced or underpriced. Okay. First of all, see the question and tell. Did he say anything about investors' time horizon? Yes, are 4 years. Or else why he will tell only about 4 years? Why can't he tell about directly? They don't tell that there is an investor, he wanted to invest for 5 years. That's why I said listen to the class properly. They don't tell directly. See, when data has to be given, why you given only for 4 years? Means that investor wanted to know only about 4 years because 4th year he will sell the share. After 5th year, what will happen? Why he will care? Are you listening? I bought a car. I hold it for 3 years. 3rd year after I sold it. After sale, what happened to my car? Is it proper? Brakes are falling properly or not? How the suspension? Why I will care? If the asset is with me, I will care about the property. Asset is sold means why I will have any kind of connection with that? Same thing. Tell me, in this question, let us put in the diagram now. Okay? Put your mind and diagram. First, P0, we will purchase a share. We will hold it for how many years, sir? Answer. Very good. First year, what I will get? Loudly. How much dividend? Not 140. 140 plus how much dividend for the 4 years? Growth 12%. I will get 156.8 in the first year. Correct? Take calculator and do. Next, again on that, another how much percent? 12%. I will get 175.62. Third year, you tell. Tell me what is the next one? 196.69. Correct? Fourth year, 220 point how much? What are those? 156 something, 4 numbers you said. What are those? What are those I am asking? Expected or past or future I am not asking. What are those? What is the name? Those are dividends. Those are dividends today, na? Future. What future? Tell me. D1, D2, D3, D4. After that, why I am not concerned? I am selling at the end of D4. I am selling at the end of 4th year. If I have to sell something at the end of 4th year, I will sell at P5. I will sell at P1. When I have to sell P4, P4 will be, P4 if I sell the share, which dividends I will be losing? D4, D4 I will lose. D5 to D infinity. D5 to, at that time what is the growth? 5%. So tell me, what is the formula? P4 equal to D5 divided by K minus G. D5 can be written as what? D4 into 1 plus G. At GK you should use this 5%. Because for the perpetual period it's not 12. 12 ended with the 4th year itself. But you are computing dividends from 4th year, 5th to infinity. An indefinite period, a perpetual period ki growth is not 12. Growth is only how much percent? Shall we do it now? Keep the heading. Calculation of intrinsic value of share. Step 1. Calculation of intrinsic value or fair value of a share. Okay, calculation of intrinsic value or fair value of a share. First, write down year, cash flow, PV at the rate of 18%, PVCF. They have given that 18% in the question. See, expected rate of return is how much? 18. This is growth, not KE. G, not KE. Garden model, what is the assumption? KE will be always more than G. One of the assumptions is what? KE is always more than G. So if you take KE as 12, KE can't be equal to growth, then denominator of 0 will come, answer goes to infinity. So, first write down year 1, year 2, year 3, year 4. Write down up to here. Year 1, year 2, year 3, year 4. Okay. Tell me, for these 4 years, What is the growth? Write down G equal to 12%. When I am selling at the end of first year, second year, third year, fourth year, write down 4 again. But fourth year when you compute, growth has changed to how much? 5%. Tell me, growth is in one type of growth or two stages of growth. That's why what is the name of the model? Two-stage dividend valuation model. It is stage 1 and stage 2. Holding period is stage 1. Sale is called as stage 2. Understood? This is called as what period? First period is called as what period? Holding period. This period is called as perpetual period, sale. That's why they call it two-stage dividend model. Okay, what? Next, cash flow. Take calculator. 140 plus 12%. Write down. 156.80 plus 12%. 175.62 plus 12%. 196.69 plus 12%. 220.29. Don't do the remaining because they are selling at the end of fourth year. Up to here, everyone understood clearly? Yeah. Next, below write down. Keep a star mark here or a working note. Write down 2 lines gap. Keep a star. P4 equal to. Tell me P0 equal to what is the formula? P0 equal to what is the formula? D1 by K minus. 0 in P means future D1. We are selling at the end of P1 or P2 or P3 or P4. P4 will be dependent on D3 or D4 or D5 to infinity. D5 divided by K minus G. This is nothing but cash flow per annum divided by required rate, which will be perpetual cash flow. So tell me, what is the D5? How to write D5? D4 into 1 plus G whole divided by K minus G. What is the D4? 220.29 into perpetual growth is how much? 5%. 1 divided by 220.29 into 1.5 divided by 18% minus 5%. 220.29 into 1.05. 231.30 divided by 13%. Answer is 1779.23. 1779.23. PV factor at 18%. 0.847, 0.718, 0.609, 0.516, 0.516 again. Because we are not taking fifth year, we are taking only which year? Fourth year again. Fourth year we are getting 2 cash flows. So same PV factor will apply. I am doing directly M plus calculation. You do fully. Answer at the end is Don't copy the answer. I just did it. You check. Calculation, I may do mistake. Who knows? So do it. Yeah. Everyone got the same answer. See the question now. Hey, everyone understood the two-stage dividend model, how to apply. See, price, price is traded at what? See there and tell first line it is given. What is the price of the share? Market price 2185. But what is the real worth of that share? 1410. So that's why what they are asking, state whether the share is overpriced or underpriced. Tell me, how much it is really worth? 1410.44. Traded in the market at how much? 2185. Underpriced or overpriced? Overpriced. Right. Decision. Decision. First write down. Share is highly overpriced. The share is highly overpriced. Understood everyone? With this, we have completed also the concept relating to the two-stage dividend valuation model. Hey, completed everyone? Listen. See, question my one question was not there. It was there actually in the study material. So I say study material it was given. One question was there. Maybe if we can do that. If you remember, we have done these type of questions in the last class. PE ratio through Walter model, compute PE ratio, if the dividend policy has no effect on the value of share. Have we done or not? Those type of the Walter model, Garden formula. Yesterday we have done these type of question. I think 30% or something you have done. Same question. Just now we have done this question. 3122 numbers change. Okay. Modigliani Miller also we have done. So main question that I wanted you to do is this one, sixth question. One good question. It was not there in the study material. Sorry, in the question bank. I don't know the reason exactly. Therefore, we should not leave this question. This is a very important exam question. Okay. Let us read the question first. Please, if this is completed, we are having only one concept to discuss. What is that? Linter model. Once that 5 minutes concept, linter model. Once that is completed, chapter completed. So please concentrate on this question. See, in the month of May, question bank, question not there. We came to study material, picking a question and putting there and doing means. How much important this should be? See the screen. In the month of May of current financial year, shares of RT Limited was sold for 1460 per share. Long-term earnings growth is 7.5% is anticipated. RT Limited is expected to pay a dividend. First clarity. 20 per share. Calculate rate of return on an investor. Rate of return an investor can expect to earn, assuming that the dividends are growing expected to grow along with earnings at 7.5% per year in perpetuity. First question number 1. Question number 2. It is expected that RT Limited will earn about 10% on retained earnings and shall retain 60% of its earnings. In this case, state whether there would be any change in the growth rate and cost of equity. Super duper question came in exam. Clean bold the attempt students. Not because of bit 1, because of bit 2. So read the question first. We will have full discussion and then we will do the answer. Okay? Read the question first. Namaste sir. வணக்கம் சார். ஜன்னாகின் எப்படி இருக்குங்க சார்? Slipta. Oh, where you are going? Sit here. Full face. Fine. Sorry, sir. Anyway, you read. Okay. First of all, tell me one point. They are asking us to calculate price KEM. Loudly. That's why price is given in the question. 1460. They are asking us to calculate rate of return on equity shares. Rate of return on equity shares is KDR, KPR, KRR, KER. Loudly. Then the formula for KE. K equal to D1 by P0 plus T What is P naught? Given in the question, what is P naught? 1460. What is D1? 20 or 20 into 1 plus G? 20. Because why? Already they said it is an expected dividend. 20. So clarity is there. 20 in numerator, 1460 in denominator. But what is the growth? 0.075. 75, sorry, 7.5% given. Using these three details, can we calculate the KE just like that, like cost of capital chapter? Let us start. Step 1. Calculation of KE. Calculation of KE. Tell me the formula first. KE formula. KE equal to D1 by G. Right. D1 by P naught plus G. D1 rupees. How much given in the question? 20. Divided by P naught. 1460 plus 0.0. 20 divided by 1460 plus 0.075. 8.87% per annum. This is the return. First of all, everyone reply up to here. Understood? Read the second question and try. Read the detail 4-5 times. You do mistake. Super. But do something in the class. Try. What are the details given? What we learned in cost of capital? What we learned in dividends till now? Leverages anyway will not touch this question. So cost of capital learning, dividends till now what you learned. On that only the question came. Try. I will give 5 minutes time. Wait a minute, I make it full screen. Now you read. Now full question is available on the screen. You can read. Do it properly. Try at least. Everyone, please tell me. Have you tried at least? Sir, I don't know what you have tried. Listen, if it is this way, very good. Or else at least learn now. See. First of all, listen. This particular question, whatever you are seeing on the screen now, normally it was given this way. Latest study material again released in that they said expected to pay was changed to paid. Then what will happen? Nothing will happen. This will become D0. You understand? Yeah. Other than that, nothing, no change. Okay. This was taken one attempt before. Latest material, they just changed it. Okay. They said that it is not expected, it is paid. Paid means 20 will become what? D0. Expected to pay means 20 will become what? D1. On that there is no problem. Okay. Listen. I will give you an example. Try understanding this. First point number 1. Step 1, everyone understood. Full clarity at step 1. Step 2. Calculation of revised growth. Calculation of revised growth and revised KE. Calculation of revised growth and revised KE. Okay. See, if you wanted to go as per ICI latest material answer, just write down here. If dividend is paid instead of expected, then rupees 20 will be D0. Rupees 20 will be D0. Then answer will be rupees 20 into 1.075 whole divided by 1460 plus 0.075. So 20 into 1.075 divided by 1460 plus 0.075, 8.97. That's it, slight difference. So in the new study material, if you see 8.97 will be there. Existing materials, if you see the old 1 year before, if you see, you will find the answer 8.87. Everyone please answer in the live also. Have you all understood to here clearly? Okay. Okay. Now, second part of the question is important here. That is the purpose why I am doing this question now in the class. Please listen. Very complicated discussion. Listen carefully. See. Question I will copy. See here. I am recopying the question so that I need not go up and down again. See. It is expected that RT Limited will earn 10% on retained earnings and shall retain 60% of its earnings. In this case, state whether there would be any change in the growth and cost of equity. I will ask one question, tell me first. Retention will be in the hands of company always. Who will decide? The company, who will decide? Board of directors will decide. Whenever profit comes, whether to retain that, whether to pay that, if retain, how much to retain, to pay, how much to pay, who will decide? I'm talking to all of you. Board of directors will decide in a company. So, board of directors hands light is there. Which one? Which one? Retention. And it is a constant, a variable. Retention is a constant, retention percentage. B will be constant, can be changed. But you will invest money somewhere, correct? That you can't change because your work is only to invest there. Just because of the reason board wants, they won't give higher return. Just because board wants, they won't give lower return. Return always is in the company hands, not in the hands of the company. Loudly. But what is in the hands of company? Retention is in my hands. Company makes a profit. What are the two options available as per Garden model? Actually, forgot, I will repeat. Okay, whenever profit comes, you are having two options. Number one, dividend. Number two, start again. Number one, dividend. Number two, how much to pay dividend? How much to retain as a dividend? Whose hands? Answer. Sorry. I decided to pay 30%. How much will be retained? I wanted to pay 40%. How much is the retained? 50, 40, 70, 80, 90, 100. Whose hands it is? I can change every year also if I really want. They don't change, but if I want, I can change. However, tell me, profit came. What are the two parts? Number one? Number two? Number two? Now tell me the answer. I wanted to pay 40%. How much will be retained? Loudly. Now my question is, that 60% what I get, what I retain, I have to put it ideal investor. Invest at what rate? Correct. Invest at what rate? That is not in my hands. R is return on equity where I am going to make my investment. For example, if you invest in bank FD, you will get 8%. Okay. Now tell me, company invested and said, bank pay me 10. Will bank pay 10? Answer. What it will pay, only it will pay. Means what is there in the hands of company? What is there in the hands of company? Retention you take care. But R is not in your hand. What I am going to explain now. G is made up of two components. What are the two? B into R. In that B is in your hand, R is not in your hand. R is constant. Listening now. The question is based on. See the screen. Company will earn 10% on retained earnings. 10% on? Now you tell. Retained earnings belong to whom? Which shareholder? Answer? That can be invested at what rate? In this question, at what rate they can invest? Means R is 10% given in the question. R is how much percent here? 10% given. What is R? Not number. What is R? What is R? What do you mean by R? Return on? Equity means retained earnings belongs to whom? Answer. On that, how much return company could generate? So R equal to how much percent? That will change according to the needs of the board of directors, or it will not change. What can be changed? Answer. That's what happened in this question. First tell me one answer. See here. A. Revised growth. Don't write along with me. First listen. Revised growth. Tell the answer for growth. G equal to what into what? Tell me. What is my retained earnings retainment? B or 0.6? B or 0.6? Some are just repeating the answer after the crowd is answering. Okay? You should only realize your mistakes. I have seen you. You are answering with crowd. Start again. What is the formula for G? B. What is B? Retention proportion. What is R? In this, whose hands R is there? Can board of directors control that R? No. Therefore, it is how much? Board of directors can control if they want. I can make it 0.6 this time. I can make it 0 also next time. Or I can make 100% also next time. Correct? And in this G, one is in your hand, One is in the hands of the market, correct? So what you cannot control is a constant always. Okay, but what you can control is a variable which can change every year. So therefore, what is the point here? What is the B here in the question? 0.0, sorry, yes, 0.6. So 0.6 into 0.1, 0.6 into 0.1, how much it is? 0.06, also called as how much? This is the change in the growth. Previously, what is the change? What is the growth rate in the question? 7.5. Now, what is the change? What is the growth? 6. First answer, everyone understood clearly. Yeah. Previously, growth is. Huh? Please tell me one answer. How 7.5 might have got to them? How 7.5 might have got to them? What is 7.5? G, correct? How that 7.5 is made up of? G equal to B into R is already known to us, correct? That won't change. How much? And if I write 0.075 here, I can calculate the old payout ratio. And everyone, what he is asking us to do. So everyone understood the logic clearly. Just write down up to here. Like students also please give a reply. Have you all understood up to here? Okay. Have you copied up to here clearly, everyone? Now listen. B. Revise the KE. The important lesson. Revise the KE. Please help me with an answer. What is the don't do this. Don't do this. I will do and I will give time for to copy. Listen first. What is the formula for KE? D1 by P naught plus G. Okay. Now answer my question. Let us take 20 as a D1 value. What is the D1 value? 20 as a D1 value. D0 to D1 as some value. Dividend value is 20. Now, this 20, whatever they have given in this particular question as a dividend, let us say it is D0 only directly. This 20 will be coming because of D1 means EPS into payout ratio will give the dividend. Correct? This we discussed for around 10-15 times in our class till now in the last 10 days. Which concept? Whenever EPS is there, EPS into payout ratio will give you what? Answer. When we discussed last, this concept, when we discussed last, that means EPS into payout will give you dividend. When we discussed last, which statement? On the yesterday, EPS 1 into 1 minus B divided by KE minus BR. Numerator E1 into 1 minus B means dividend. Yesterday you have done and you forgot. Shamelessly telling about leverages chapter. Gordon ki second first formula is there earnings model formula. Tell me what is the numerator? The formula also you are forgetting. E1 into 1 minus B divided by KE minus B into R. Forget about denominator first. Talk about numerator. What is the numerator? E1 also will E earnings into what is B? What is B? 1 minus B means what? Retention, payout. EPS into payout will give you what? Outlay. 10 rupee earnings. Retention is 60. Means payout is how much? 1 minus 0.6. 40% is the dividend payment. Correct? Yes, everything wrong. So see, revised K, you tell the answer now. What is, take it as a D0 first. What is D0? 20. This 20 is dependent on some EPS into payout ratio. Some EPS into payout ratio. This 20 might have come. Now it's working. Listen. Listen. Shall we continue on? Listen. What is the D0? What is the dividend? Nothing but EPS into payout ratio. EPS into, I will ask a question. Previously, what is the G? 6%, 7.5%. G equal to 0.075. Like this, can I write? G is multiple of what and what? B into R. Which is not in the control of board? Which is not in the control of board. So therefore R can't change. Okay, what only can be changed? Payouts you can change. If you want retention payouts, you can change. So sum B, which is equal to how much? 0.075. What is B? 0.075 divided by 0.075 divided by 0.1 means how much? 0.75 or how much percent? B means retention, payout. How much is retained? Answer. How much is the payout? Just 0.25. Previously, EPS into some payout has given us a 20. Correct? Now we came to know about how much payout is there previously. How much payout? 0.25 into 20. So EPS equal to 20 divided by 0.25. EPS is 80. EPS is how much? 80. Loudly, EPS is how much? 80 is the EPS. It is the EPS. Okay, now this is last year, this year. This is the last year, 20 we have taken as what? D0. And these all details are relating to this year or last year. Loudly everyone. This year growth is changing, correct? This year growth is not 7.5. This year revised growth is how much? Loudly. See the question. It is expected that RT Limited will earn 10% on retained earnings and shall retain 60% of the 10% R will be same. Retention instead of how much retention? 0.75. We will retain only how much? 0.6. Previously, what is the payout? 0.25. Now, what is the payout? 0.4. What is the payout? Okay. In this case, state whether there would be any change in the growth rate and the cost of equity. This is the question they asked. Did you understand the working clearly? First of all, everyone, tell me, what is the D0 we have taken? Answer? If I take that as a D1. Same answer, just G will not be added one more time. Correct? Remaining everything will be intact. Write down. Revised KE. Keep the heading. In that write down number 1. Calculation of existing payout. Existing growth equal to 0.0. Therefore, G equal to 0.075. G equal to B into R. 0.075 will be equal to B into 0.1. This is equal to 0.075 divided by 0.1. 0.75. This is the payout proportion. Up to here, everyone understood clearly? So existing payout will be 0.25. Existing payout will be 0.25. Number 2. EPS. EPS. EPS equal to first write down EPS written down. First write down DPS equal to tell the formula EPS into payout proportion. EPS into payout proportion. Tell me, what is the DPS last year already paid? 20. Okay, 20. EPS we don't know. At what payout it is 20? 0.2. Okay, so the EPS equal to rupees 80. Rupees 80. Okay, what? Number 3. Number 3. Revised dividend. Revised dividend. Tell me. Dividend will be called as what? DPS will be, just now we wrote the formula, tell me, EPS into payout proportion. Now our DPS will be, how much is the EPS here? 80 into, what is the revised payout proportion? What is the revised payout proportion? That will be equal to rupees 32. I wanted to ask you one question. Hey, listen. I wanted to ask you one question, answer. What is the last year EPS? What is the last year EPS? On that, how much dividend is paid? 20. Percentage is how much? You are not answering, be here. What is the last year dividend? What is the last year EPS? This year? I can answer. What is the last year EPS? Last year dividend? This year dividend is same or increased? Dividend increased because earnings increased. Dividend increased because payout is increased. Previously, what is the payout? Now, what is the payout? So company earnings the growth is not there. Only what is grown? Payout ratio is grown. So this is the expected dividend.
Sir,
Yes.
question EPS grows by 7.5.
EPS, sir?
Grown by 7.5.
That is for the last year. That only we changed now.
Last year, 8 instead of EPS.
No growth in EPS. In this question, institute has taken assumption and they have done in a way that earnings, there is no growth. Maintaining the same earnings. DPS, the company is going to change. Write down. We are going as per ICA assumption, so therefore I am writing. ICA assumed that EPS of next year has not changed. Only payout in dividend has increased. If you don't take this assumption, what will happen? 32 ki have to apply some growth. 32 will be there. This will be as per D0 assumption that we have taken. 80 is the last year EPS. Answer E1, E0. E0. Therefore, 32 also will become the revised as per that. So you need to add 1.06 as per the growth. That will be the only change. But institute has taken directly 32. So revised dividend also over. Finally, revised KE. Revised KE. KE equal to, tell the answer, KE equal to P0 plus G. We are directly assuming that D1 is 32. Alternative also I will do for you, no worry. Divided by P0. What is the P0 given in the question? 1 plus what is the revised growth already we computed? How much? 0.06. 8.19. 8.19%. Next, write down alternatively. This is more logical. But ICA book, if you open, you will find 8.1, and at that time doubt will come. That's why on what assumption they have considered, I told you. But actually, more logical is this one. Write down. EPS 0 is how much? Loudly, sir. EPS 0 is how much? And DPS 0 revised is rupees 32. Revised D0 is 32. So KE equal to rupees 32 into 1.06 whole divided by rupees 32 into 1.06 whole divided by rupees 14 plus 0.06. This is actually more logical, but institute has done in the first way. Divided by 1460 8.32. This is how we can do the answer. Okay, next. Keep the heading. Lintner model. One line answer, just a formula. Nothing great in that. Write down the formula. D1 equal to D1 equal to D0 plus D1 equal to D0 plus EPS into pure means what? Payout ratio or payout proportionality minus D0 into adjustment factor. AF represents adjustment factor. Write down those. Okay. AF represents adjustment factor. Okay, everyone completed? See, it's a simple formula. Listen, there is a small inconsistency also in this formula, so don't take it extremely seriously. That's why this is not even popular. Exam also very, very, very rarely tested. But there in the syllabus, I don't want to take a risk. See, this is not a share pricing model. This is a dividend payment model. That's why see there is no price inside that. See, Garden model P0 price is calculated. Walter P equal to price is calculated. Modigliani Miller P equal to price is calculated. But in this model, price is not calculated. What is computed? How much dividend you should pay? For that this formula came. What they said, na? Next year dividend should be something more than the last year dividend, correct? So D1 is first, it should be D0 plus something. Okay, it should be D0 plus something. So what they said, first take the D0, last year dividend, and the minimum that is expected by the shareholder, plus EPS you take. What you should take? EPS. EPS. Into what ratio? Lovely. Minus what? That D0. What is this? D0. This amount you balance you add to the D0. Balance you add to the into some adjustment factor. This is also called as a PE. Price earnings ratio we discussed now. That adjustment factor, so if you multiply, you will get a particular price. That's it. There is no great seriousness in this particular formula. Just remember the formula as a dividend payment. What is the formula for the Lintner model? D1 equal to D0 plus EPS into the payout ratio. Okay, minus last year dividend. That will give you the growth in this year dividend. It will give you growth in this year dividend. That into what factor? Adjustment factor. Will give you the answer. Final answer will be given. Okay, just write down the formula and remember. If a question comes 99%, these questions are not tested. If it comes, you should apply the formula. They will give the numbers there directly. Clear, everyone? With this, 100% all the concepts in the dividends chapter is also over. So, dividends chapter is also completed. Mahata Prayasena Bhagavat Krupaya, we have completed another chapter over. Next after the week, we are going to start with the king of this entire FM chapters. Capital budgeting will begin. Okay. Take a minute. Okay, say here. Listen, listen. See here. There are two concepts which are from pending area which I need to discuss. What? Zoom on. Zoom on. Listen, listen, please. Listen. With regard to cost of capital chapter and dividends chapter, there are two topics pending, not the problematic part. Theoretical discussion, which I have said that I will teach, which were not yet. Just in faster pace, I will first complete that. Let us not put even that pending. We have done 99, why we need to leave that one? See, two things that require some honorable mention before we close these chapters. Then, number one, P naught equal to d1 by Ke minus G. How this formula came? Next one is model NP0 P1 into n plus m minus I plus E whole divided by 1 plus Ke. Where did we use this? Okay, second question. And same model, good investment opportunity. This meaning was not defined. In the last class, we have done the problems also. So the theme of this good investment opportunity was not discussed. So fastly, we try to wind up these three concepts. So that particular small concepts also we need not leave. So first, let us focus on P naught equal to d1 by Ke minus G. How the formula came? First of all, answer. Listen, please. P naught will be dependent on what? D1. This is D1 na. D1 to forever. One next year dividend. Next year dividend. Wrong. It is actually D1 to D infinity. But whenever you shrink out and put it in the form of a formula, real essence of the concept will be gone. That's why I always go into the formula how it was derived and try understanding the derivation such that reality behind the concept will be understood. If I ask anyone, if you even ask me before me learning this concept, I will also tell yes, P0 is dependent on D1. But actually it's not just a D1, it is a D1 to D infinity. We cannot see with our eyes, that's all. Sir, I will show you the proof. Before that, you will tell one thing. What is the value of any asset? Present value of? That's called as what? Value of an asset. Okay. Which value? Fair value. Assume that it will be the market value prevailing. See here. Here, cash flow, PV at the rate of KE, PVCF. Share pricing, this is the table. Tell me the answer. Year 1, year 2, year 3, year 4, or year 3, so on. Company continues till n number of years. Because life is known or not known. So assumed it to be known or not known. Life of a company will be known or not known. Therefore, it is assumed that life will be n years. That word I might have repeated at least 100 times. Okay, that will continue till infinite periods, which we call as a perpetual. Perpetual means a never ending. It will go on like that, cycle after cycle. Okay, please see the screen. So you tell, I will write down what is the dividend. What is the cash flow that the share will give? Dividend. Dividend at the end of year 1 is called as what? D1. Dividend at the end of year 2 will be called as dividend at the end of year 3 will be like this. It will continue till how many number of years? N. So what dividend will come? Dn. See, single cash flow, what is the formula? Single cash flow. What is the formula? 1 by 1 plus r whole power n into cash flow. That's why we will write cash flow divided by 1 by 1 plus r whole. Cash flow divided by 1 plus r whole power n. A cash flow we call it future value. Otherwise, present value key, what is the formula? PV equal to FV divided by 1 plus r whole power n. We can write it also as FV into 1 by 1 plus r whole power 1, 2, 3, 4, like that it will continue. Correct? Therefore, tell me, first year how we can write? 1 by 1 plus KE power 1. Correct? That KE if it is 10 na 0.1, KE 15 na 0.15, divided by 1 by 1.15 power 1, power 2, power 3, like that it will move on. Am I clear? Tell me, second one you should tell. 1 by 1 plus KE. Next, 1 by, like this it will continue till 1 by 1 plus KE whole power n. Multiply both row. D1 by 1 plus KE power 1. Next, D2 by, continue. So on till dn by 1 plus ke whole power n. What is the total? What is the total? Instead of telling the answer, if you are totaling, you are wasted. What will be the resultant answer called as? That's what I'm asking. Simple question. Perfect. What you will get? That's it. Fair value of what? Which does it? Fair value of dividend. Copy, yeah? You want it? This is called as, what it is? P0. This is called as, what is this? Fair value of a share. Okay, well, first you keep the heading D1 by Ke minus G derivation. Write down up to here. This is stage 1. Then don't ask the question again how that formula came. One time in life only you will learn. Derivation for P naught equal to D1 by Ke minus G. Okay, right now. Step 1. This table you need to copy. Completed writing up to here? Please show some urgency in writing. These are all additional discussions, so please make it fast. Okay. Up to here completed? Listen. Stage 2. First listen like this. Once the stage 2 is completed, I will give you time for you to copy. At the time you can please see here. Listen. See here once. They say like this. After writing that, with the 3 years data, you tell me what is the answer for P naught? P naught equal to? No. Total. Tell the total. Aggregate of summation of what? D1 by 1 plus K plus D2 by K. So on. Continue till what? By. So this is the P naught formula. It will continue like this. I just wanted to ask you one question. What is this? P naught. P naught means what? Fair value of a share. When? Today. Depends on D1 or D2 or D3 or D1 to D infinity. Remember these words. Okay. So it takes into consideration D1 to D infinity. Everything will be taken. Infinite dividends they will take. Now question number 2. See, I will ask a question without putting more mathematics into your mind. Just a simple question. D1, D2. How D1 will be calculated? How D1 will be calculated? D0 into 1 plus. How D2 will be calculated? D1 into 1 plus. See, if D1 and D2 has to be compared, which is higher, which is lower? D1 will be higher, D2 will be higher. Answer? D2, D3 la? D3, D4 la? D63, 64 la? Loudly. And what you understand? Successor term is always more than the predecessor term. Successor means what? Next. Predecessor means what? Before. Which term is always higher? Successor or predecessor? Sometimes always are. At the same rate again. The rate is called as a G. Constant rate like is growing. 10 rupee dividend became 11 rupee. 11 became 12.1. 12.1 became 13.3. At what rate it is growing? 10% rate. The next number is greater than the previous number. Do you understand? What I said, tell me. At what growth? Constant growth. Next one is bigger than. Next one is bigger than previous one. Are you understanding? Physics you might have seen. Childhood time when you are reading in schools, there is a concept called as a fusion and fission. Fusion uses higher amounts. Next coming element will be always having an atomic energy more than the previous one. Fission always makes it more simpler. Atom bomb works on the concept of fissions. So, commerce. COVID. Nice. Sir, okay, listen. Direct entry. What is that to do with the question? Even if you are direct entry or something, you lived and came not to them. Sir, okay. Listen. As if this concept is there in CA foundation, you are talking. Direct entry. Sir, listen. Listen, sir. Listen. Hey, listen. Point is, see here. The concept of growing at a constant rate where the very next term will be more than the predecessor term, the very next term will be more than that predecessor term. Growth is at a constant rate. That progression in mathematics, people call it as a geometric progression. What progression? Geometric progression. Geometric progression means at a constant rate growth should be there. Arithmetic progression, the constant growth will not be there. Growth will be there. Listening? Growth is there on a constant rate is a geometric progression. Growth is there but not a constant rate. 1 is there, 6 is there, 12 is there, 18 is there, 31 is there, 45 is there. These all are on an arithmetic progression. Means on a number basis they are higher. Listening? Pattern you understand? 1, 2, 8, are you understanding? 16, 32. What is happening? There is a pattern here. Squares I am doing. 1 square, 1, 2, 2 square, 4, 4 square, 16, 16 square, 256, 256. Like that, if you start doing everything, bigger numbers will come. Listening? A constant rate, like if something is growing, we call it progression. But a growth is called as a progression. If the progression happens randomly, we call it arithmetic. If the same progression happens on a constant rate, we call it geometric. Geometric progression started. So, see here. Company is assumed to grow at a constant rate, at a G rate, 6, 7, 5, 10, 11, some number. It is growing. You are not growing. See there. So, growth will be there on a constant basis where the next number will be always more than the previous number. Any next number you take, previous number, it will be higher. So, why I am telling this now? Like this, at where you will stop? D1, D2, D3, D4, D5, D6. How many years you will take? Building a life 40 or 50 years. Machinery 6, 7 years. Debentures 5, 10 years. Preference shares 10, 15 years. There is no end for this and we don't know where it ends. Infinite possibilities are there. Therefore, what they say, you cannot take that much of a big number. You should first shrink and assume some smaller number instead of that. For that, one person found out a great attempt he made to find one concept called as y equal to a by 1 minus r. Repeat, what it is? A by 1 minus r. For this, a bigger derivation will be there. Lot of statistics is involved. I am not going into that. I will make you to understand this and apply this and derive the formula. Listen carefully. What he said now, y is the resultant. Y is the resultant with infinite limitations. Limit n tends to infinity. Means there is no end for that. P naught is taking into consideration 1 dividend, 2 dividend, 3 dividend, infinite dividends are. Lovely? Where we will stop? You should stop at some place. Na? Therefore, that person found a concept called as a by 1 minus r. Sir, what is a? Here y is our resultant. What is it? P naught with the infinite results inside. Next. A. First term in the sequence. A number sequence of first term is called as what? A. R. Highest term by lowest term. Repeat, what it is? Term by lowest term. Any two consecutive numbers. Tell me. I will call this first term. D1 by 1 plus ke equal to first term. In the entire sequence, this is the first term. I am talking to everyone. Next. I will ask a question, tell me. This and this, which will be higher? I will call it A, I will call it B. Which is higher? B is greater than A or A is less than B, correct? Or B is greater than A. Clear? Answer. Second. This and this, B and C, who is higher? C will be greater than B. No, everyone understood? So this will continue for one time or two times or infinite times. So this is the highest term, this is the lowest term. No, sir, I will take these two. Take it. This is highest term, this is the lowest term. You understood the concept clearly, everyone? Now listen, final touch. Apply this formula and tell the answer. That's it. Start, everyone. Y means what for us? Very good. P naught equal to what is A? Very good, very good. Everyone repeat. What is A? D1 by 1 plus K. If power 1 we need not write. Same answer will come. 1 power 1 is how much? 1. What you write? No need. So D1 by 1 plus K. What is this? A. Can you please explain me what is R? R is what? These two terms, can you tell the R? R means what? Lowest by highest, highest by lowest. Highest by? Tell me what is the highest? D2 by 1 plus K. Very good. Divided by 1 plus K. Like this I can write. Now I will take it to the numerator directly. You will multiply that. Basic mathematics, that rule you know, na? Okay. Now tell me how to write it. D2 by 1 plus K. No. In this, I will write it as D2 by 1 plus K into D2 by 1 plus K. Instead of writing square, I will write it 2 times. A square can be written as A into A. 1 plus K whole square can be written as 1 plus K into 1 plus K. Into, if you take this above, what will happen? 1 plus K divided by D1. 1 plus K divided by. Now tell me, D2 can be written as D1 into 1 plus G. Can I write like this? 1 plus K, 1 plus K. D1 cancels. Tell me, what is the final answer for R? R equal to 1 plus G by 1 plus K. Everyone understood? We want R, A by 1 minus R. So we want what? 1 minus R first. So 1 minus, what is R? 1 plus G by 1 plus K. Take the LCM as a 1 plus K. Crisscross, multiply. 1 plus K minus 1 minus G plus G. Minus 1 minus G. Minus 1. See here. Take the LCM and tell the answer, everyone. 1 plus K. 1 plus K minus 1. Minus 1 plus 1 cancel. So 1 minus R. Tell 1 minus R equal to K minus G whole divided by 1 plus K. Keep this in mind. We want AR 1 minus R, A by 1 minus R. Y equal to, what is the formula? A by 1 minus R. What is Y? P naught. What is A? P1 by 1 plus K whole divided by K minus G whole divided by 1 plus K. 1 plus K, 1 plus K cancel. P naught equal to D1 by K minus G. That's how that formula came. After that, what they have done? P naught was brought here. K minus G taken here. K minus G equal to D1 by P naught. Ke equal to D1 by P naught plus G. This is how that formula also came. Everyone understood that? Now tell me, formula they have written D1 by K minus G. D1 by K minus G. It taken only D1, it has taken D1 to D infinity. And in formula you cannot see all those things, but that formula contains d1 to d infinity entire set of numbers right now. Completed. Begin everyone. Listen. See here. Hey, listen. Though in the formula P naught equal to D1 by K minus G is used, that consider only next 1 year D1 or considered infinite dividend. It considers 1 year dividend or infinite dividend. Same also for KE. We are not just considering next 1 year dividend. 1 year, if you take at the same rate, it is going to grow. So that's internal within the geometric progression formula. Anyway, this we completed. So over. Next, approach formula. See here. Approach, what we have calculated, what we have given as a formula, NP naught equal to P1 into N plus M minus I plus E whole divided by 1 plus K. You will tell the answer, I will write. Tell me, Modigliani-Miller, what is the first formula yesterday we have discussed? P naught equal to D1 plus P1 divided by 1 plus K. So D1 plus P1 divided by 1 plus K. Okay, listen. Listen once. Next, what is the MP1 formula we discussed yesterday? I minus E. Do you remember this formula, everyone? This is another formula. From these two formulae only this formula came. This formula already derivation I told you in the last class itself we have written. K equal to D1 by D1 plus P1 minus P naught whole divided by P naught. Through that formula you already derived this and I shown you, correct? This formula derivation not there. This is a meaning. I told you, I want investment. Complete investment, you don't require new shares. Correct? First, figure out and finance through your earnings. If you pay dividend, earnings net of dividends you will pay. You will be using it. Balance will be raised through public offer. Do you remember the meaning of this formula? So already completed. So see here. Modigliani-Miller taken the same formula. Don't write, listen first. P naught equal to D1 plus P1 continue divided by 1 plus K. What he has done, P naught means P naught by 1. 2 means 2 by 1. Answer will change or will not change? Will not change. What he has done, he has multiplied both the numerators. Multiplied both the numerators by N, number of shares. Tell me, P naught 1 share, NP naught total value, D1 1 share, ND1 total value, P1 1 price, NP1 total price. Tell me, multiply and tell the answer. Only numerators multiply, left side and right side consistently have to multiply the numerator. Start. That also doubt. N into P naught, how much it will become is a doubt for you. Start answer. NP naught equal to ND1 plus NP1 whole divided by 1 plus K. Up to here, okay, va? Next, let us continue further. NP naught equal to ND1 plus NP1. Tell me, if I add 1 and deduct 1, answer will change? No. Therefore, what he has done? He has done like this. Minus MP1 plus the MP1 he has done. If you add MP1 and deduct MP1, answer will change or will not change? Will not change. Whole divided by 1 plus K. Start. NP not equal to ND1 plus NP1. Now answer. Minus of, tell me, what is MP1 formula? I minus E minus ND1 plus MP1 whole divided by 1 plus K. Next continue. NP0 equal to ND1 plus NP1 minus or minus like that multiply. Right? Basic integers, 4th standard, 5th standard. Start. Minus I plus E minus of minus of minus. Minus or minus will be? Minus or minus is minus of. Minus into minus. Plus into minus. Tell me. Minus ND1 plus MP1 whole divided by now listen, plus ND1 minus ND1 cancels each other, right? Tell me, NP not equal to NP1 plus MP1. Here it is there, na MP1 minus I plus E whole divided by what? 1 plus K. Rewrite this. NP not equal to, if you take P1 common, what will happen? P1 into N plus M minus I plus E whole divided by 1 plus K. This is how the formula. Write down fast. Hey, write down fast. Okay. Okay, done. So with this, Modigliani-Miller formula analysis also completed. Let's see here. Yesterday we have done M&M model. Model we have done or not? Nothing you need to do. Go home and do this formula analysis. You need not do anything. Take the P0 because P0 equal to D1 plus P1 divided by 1 plus KE we have taken or not? Answer, sir. P0 given in the question 100 or something amount they have given. That you need to take into existing number of shares equal to P1 new price N plus M existing shares plus new shares on public offer minus investment opportunity divided by N divided by 1 plus KE. You will get the answer. When dividends not paid, when dividends are paid, both cases you can do, both answers will be same. But this is called as existing wealth because we are multiplying P0 by M, P0 by N. N means existing number of shares, current wealth. Clear? Yesterday already we proved that after investment wealth won't change. Both cases it will be same. This is also coming in the same way. Okay, try it. Nothing great. Listen. Now question will come, sir. We completed P0 equal to D1 by K minus D derivation. We have completed this also. But MM model he said that good investment opportunity will be there. Correct? Sir, what do you mean by that good investment opportunity? Question will arise. Yes or no? That discussion we are going to see in the chapter called as capital budgeting. Okay, that's why it's yesterday only I wanted to discuss that. Anyway, in capital budgeting, there will be one concept called as a NPV IRR. What is the concept? NPV. The way I have to tell about that. At that time, I will tell. Then 2 minutes you will understand what MM model wanted to convey. Shall we begin? Keep the heading capital budgeting. Write down capital budgeting. Capital budgeting. Capital budgeting. Okay. So, can we begin? Listen. Capital budgeting. Next chapter name is capital budgeting. First, let us understand contents. Write down along with me. Basics of capital budgeting. Basics of capital budgeting. Basics of capital budgeting. Second. Techniques in capital budgeting. Underline that. Write down the techniques. Accounting rate of return or annual rate of return or profitability return. You can call it in any way. In short, they call it as ARR. A or R. Accounting rate of return, annual rate of return, or sometimes they call it as profitability return. Second, payback period. Payback period. Discounted payback period. Discounted payback period. Discounted payback period. Next one. Net present value. Brackets write down NPV. Market most important. This is the Maharaja of the capital question. Which concept? NPV. Write down. Name of the concept is NPV. If you can understand the concept of NPV, you will understand almost everything in this chapter. That much important this will be. So many new things we will learn in that NPV computation. Next. Internal rate of return. IRR. This concept you know already. Take trial and error two rates. Cost of capital chapter we have done accurate YTM, accurate KD using YTM model. We will take PV at rate of some rate we will take, another rate higher rate. Should come somewhere. One is lower than the value, one is higher than value. We will take desired value of the bond. Say, yeah. I told na capital budgeting, I won't discuss that one more time. I won't discuss because I discussed already in cost of capital. I will directly go into the problem. At that time, if you could not do, don't blame me because I warned you minimum of 5-6 times when we are doing cost of capital chapter. I will not teach again IRR. Directly straight away problem say. You suffer if you don't listen. Next. What is the first concept here? Accounting rate of return, payback period, discounted payback, NPV, IRR. Next one. Profitability index, PI. Profitability index, PI. Okay. MIRR, MNPV, modified IRR, modified NPV. Rarely tested, but there in the syllabus. Don't take risk. Very rare. And the last 10 attempts, I never saw a question on that. But still there in the syllabus. Next. EAB, EAC. Equated annuity benefit. Equated annuity cost. Modified IRR. Modified NPV. Modified IRR, modified NPV. Okay, well, have we written? Okay. Techniques in capital budgeting completed. Other concepts. Other concepts. incremental cash flow analysis, capital rationing, mutually exclusive project analysis. All are miscellaneous. 1-2 new points will come. At that time we will discuss directly. These are all the concepts in the chapter called as capital budgeting. Capital budgeting is, in our textbooks, they generally call it investment decision. Which decision is it? Investment decision. This is not a financing decision. Finance decision over. Cost of capital over. Leverage is also over. Na? Financing decision, the only capital structure theories is pending for us. Yes sir, no everyone, at least could you realize that? Cost of capital completed, the biggest one in that. Second one, leverage, that is also completed. What is the third one? Capital structure, that we did not complete, we completed dividends. Now we came to the biggest one called as capital budgeting. Once we complete this, then we will discuss about the remaining things. So anyway, please see the screen. Capital budgeting is the name of the chapter. 8 marks to 12 marks is the weightage. 2 questions you can expect in the exam. Minimum 1 question guarantee will come in examination for 8 marks. Important, very important, very, very important. Without this, paper will not be prepared. Without this chapter, paper will not be there. Okay? And moreover, next very important thing is, this is capital budgeting. Just for awareness sake, there will be a chapter called as Advanced Capital Budgeting in CA Final. What is the name of the chapter? It is Advanced Capital Budgeting. None of these discussions will be made in inter. Okay? Inter, none of them will come. See, where you stopped at inter, there starts the final capital budgeting. And what problem will happen in final? Inter students don't feel difficulty. Final students will have sleepless nights. Reason another? These all concepts ki basics are required. What basics? They should know what is NPV. They should know what is IRR. They should know MNPV. They should know MIRR. Payback periods. They should know very clearly by the time they do the problems. Listening up? They do not prepare well at FM, at CA Inter. They find it extremely difficult with this chapter called as Advanced Capital Budgeting. Literally, they leave for choice. Like that, the situation will be. See, just for understanding sake, these are all the concepts in CA Final Capital Budgeting. Inflation, techniques in capital budgeting, statistical techniques, probabilistic analysis, variance and standard deviation, coefficient of variation in capital budgeting, risk adjusted discount rate, certainty equivalent approach, sensitivity analysis, scenario analysis, simulation analysis, in that again basic simulation and Monte Carlo simulation, decision tree. These are all the segments in CA Final Capital Budgeting. Why I am putting this before you now? In this, did you see anything in our learning objectives? In our CA Inter Capital Budgeting context, did you see anything out of this? Nothing will be there. Okay? Nothing, absolutely nothing will be there. Okay? If any fool thinks miscellaneous is a topic, he is the biggest fool first. He should go to a doctor once after the class. Miscellaneous, if we think it is a topic, and we don't know the meaning of miscellaneous. So, point is, statistical techniques and conventional techniques, all the other miscellaneous parts, none of them we are going to touch in CA Inter or in CFA Inter. Absolutely, they are new. Along with that, there are another 3 decisions. Replacement and abandonment decision, not there at CA Inter. Inflation, special techniques. See, these things you won't see at CA final, interlevel. This all comes at final. But lot of discussions, see for example, in CA final A, this concept is not there at inter, but what they have to calculate? What they have to calculate? NPV, which requires knowledge of CA inter NPV. Like that, all the concepts you can say, decision tree, all these things will come. At the end of every question, finally what has to be calculated? Which is dependent on CA inter knowledge. The problem starts. Concept may be CA final concept, but approach should be as per CA inter. Then final the problem will come. In decision trees when they do a lot, here what you do is only just 10-15%. This much of analysis those students have to write, or else they can't understand how the decision trees apply. Lot of complexities will come in CSEMA final AFM papers. Generally, a CFS people will become and without anything. Lot of effort is required. You have to understand things. So that starts at the basic. Like you only, I also have started. So slowly you have to understand things. Slowly over a period, it takes 6-7 years or 10 years it may take. But at one moment when you reach your 30, definitely you will understand what is happening in the world of finance. Because finance, no one can crack everything just in 20, 22 years or 23 years. You may pass CA, but finance is an ocean. You have to go through that. You should understand things around you. Then you can crack things. So what I am trying to explain, CA final, your approach will be dependent on how good at CA interlevel. I am again and again telling the same thing. Please understand capital budgeting at CA interlevel in a proper way, not like just for exams. Okay. So see here. First one, basics in capital budgeting. Here we will learn about what are all the precautions that one has to take to understand the topic called as capital budgeting. In the basics, we are going to understand so many things like what do you mean by incremental cash flows? What do you mean by tax savings? What is the impact of depreciation? All these things we are going to see in this basics. Next, techniques in capital budgeting. First technique, second and third. These are comparatively easier when you compare with others. Main toughness starts once which comes into picture. Once NPV comes into picture, model becomes very difficult. Complication will start. So how it will be, all these things we will see. But before that, please get the heading basics in capital budgeting. Without wasting your time, I will directly go into the point what is required for your exams. The live students, please give a reply. Can we begin? Okay. Basics. Before that, see here once. See here. Basics in capital budgeting. I will not make you write entire notes, sir, but main points I will discuss and we will write summary. Number one, features of capital budgeting project. This is a popular 3 mark theory question. So just learn idea behind what is a capital budgeting project. Features of capital budgeting project. This one. Features of capital budgeting project. First of all, tell me, whenever you are taking up a capital budgeting project, hey, listen, whenever you are taking up a capital budgeting project, you are taking a short-term decision or long-term decision. For example, I wanted to purchase a building. See, I wanted to purchase raw material. Even if there is a defect in raw material, immediately you can change, or at least tomorrow if you wanted to buy, you can buy better stock. That is only working capital. Every day investment is called as a working capital. One time investment of a huge amount is called as capital budgeting decision. Listen, I will explain you one point. I wanted to purchase, please, shall we? Listen, I wanted to purchase a notebook. For example, you wanted to purchase a notebook. You purchased it. That was not at all good. Paper quality was not good. The ink is immersed and shown on the other side of the paper. You took a wrong decision. Here, the problem is it's not a long-term decision. It doesn't affect you in any way. Maximum 100 rupees will be lost. You can give it back to the person, or if you do not take back, extra 100 rupees, you will take 100 rupees a loss. Yeah. But, for example, you purchased a car, same car worth 10 lakhs. After buying, you found it is not good. Now, this decision and buying a book will be same and different. These two can't be even compared, correct? Same happens also in company. Raw material, if there is a wrong decision taken, hardly one group of items only will get defected. But one machine unnecessarily if you buy, which is not worth for the company, it will cost crores of rupees to the company. Capital budget. Capital budgeting decision will come under that category. Capital budgeting is not a one-time decision. I mean, it's not a one-year decision. It is a long-term decision making. The decision you take today will have its impact not for 1 year, will have its impact over a period of 5-10 years. Like decision to join CSEMA. You understand? This is not a normal decision. Yeah, it's not a join, become something like that. Like that, it should not be done. These courses, people should be very serious enough. So, or else it is impossible to crack these courses. So, seriousness, a level of seriousness is required. Just putting money won't pass time. That be the case, everyone will pay the fees and become CSEMA. Problem is not about payment of fee. Problem is about the seriousness. Unless and until something is lost, we will not know the value. The day when every one of our friends will qualify, who's other than after us, we will fail now. That they will understand the pain. We wanted to literally jump from third floor and die. Not because we failed, because he passed. The idiot who is sitting after you today and making you enjoying the class without you making listen, he will pass or she will pass. You will fail. Take it on a serious note. That day you will understand the pain. And then you will make a note about a person. He or she sat along with me. Okay. Just we both had the same kind of entertainment in class, but he or she qualified, but I did not. Means he or she cheated me. This story, why you need after 1 year? See, hey, listen, I'm telling this, hey, whoever think about me in any way, I don't care. But I wanted to tell something else, I will tell on face. Be serious in CSEMA course. Are you understanding? Huh? Either dilly-dallyingly, you can't do the course. Nah? This is not a course of that kind. We are not doing BCom graduation. Nah? Yeah. So please, listen carefully. Yeah? Concepts are important. You can't understand the seriousness. So, please be very careful. Listen carefully. And I said very clear, I will be bloody straightforward always. Please. Shall we? Shall we continue? No. My point is, serious does not sitting like that. Emotionless baseless. My concept of seriousness is, I can tell you, seriousness means You need not see me seriously. I can also see much better than that. Point is not about that. Point is about your behavior will show that serious. See, you tell wrong answers, she will give wrong answers. But at least she will give answers. I said I will be very straightforward. Please don't think about it. She'll give wrong answers, but she give answers. I really like such kind of students. Listen, student range who will give right answers? Yeah, they will give wrong answers. I will shout, they will rectify. At least for that you should be ready, na? At least you should be ready to give wrong answer. Wrong go, right go, you put a poker face when I ask a question. Isn't it? That is also not a problem. But you are cheating yourself, na? Just because of the reason I could not see you in the last bench, you are cheating yourself. That's not right here. You are doing wrong. 100% you are doing wrong. I can tell on face also if you come and stand in front of me. You did wrong means you did wrong. I will come to road day and tell you have done wrong. You understand that? If really needed, na, who big you are will come on road and tell you are wrong. What is one person? So listen carefully. So if wrong is there, wrong is wrong. That's all. Whosoever it is, whatever he has done. So please listen carefully. Capital budgeting chapter, please, I am requesting you for very long period. Capital budgeting is important, important, important. Why don't you understand? I really don't know. Please listen. Point is, features of a capital budgeting project. Capital budgeting project, whatever decision you take is a long-term decision. See, long-term decision will again have three parts. Long-term decision means the decision you take will have impact over period, not for 1 year. For example, I will give an example to the ambience, to the reference you can understand. See, companies like Microsoft, companies like Apple invest more on AI now. Now, not before, now they are more into AI. Why they are investing more into that? Because maybe they are thinking the future will be, at least future means they can't predict next to 20, 30 years. At least the next to 5, 6 years or 10 years, world will be run on AI. So therefore they wanted to take that opportunity, the chipsets, everything they are trying to rectify and make it in accordance with AI. Microsoft, to some extent it is successful. Nvidia already have done. But Apple is not doing very well in that AI segment especially. Now they are doing it. That's why they are investing $700 billion on AI segment now, Apple. Because they don't want to go for any outsourcing. $700 billion is a small amount or big amount. You imagine 100 crore is 1 billion. 700 crore is much big amount. 700 crore into, 700 billion into dollar into 100. You can imagine how much amount they are putting. They are putting 21% of total Apple's wealth in AI now. Are you understanding? How much? 21% of Apple's wealth. And they have taken 30 years to build an empire. In that almost quarter, 25%. They are trying to invest in AI segment now. Clear? Huge amounts they are going to invest. Why? They are thinking that future will be like that. Now tell me, if that decision is a wrong decision, will it affect Apple or will not affect Apple? Not normally it will affect. It is not a manufacturing a phone. It will create a downfall for an entire empire called as Apple. Nvidia 2019 onwards it started. I told you in the last class. Successfully they became a trillionaire now and became the world's richest company. It is a failure. Footpath. That's what the problem is. Decisions, long-term decisions, the benefit is decision will be taken once. If successful, enjoy for next to 20 years. Like what Apple has done in the initial stages. Clear? They enjoyed the fruits for around the last 15 complete years. People like me, you can see, maybe you might see or not. I went to US last time, not this time. 1 year back I went. At the time I bought an Apple, this one, Mac Studio. After that I purchased iPad. If you see, around 10 products will be there with me. All are Apple only. That does not mean I buy Apple. That means I can't come out of Apple. My situation is so worst. For example, if Samsung releases a phone, I really wanted to buy it, but I cannot. Reason, if I change that, I have to change my watch. I have to change my AirPods. I have to change my keypad. I have to change my laptop. Everything is synchronized now. They are putting us in a trap. We can't go out of it. People like me are already under the trap. We can't come out of Apple ecosystem now. If I have to change phone, for phone, I have to buy a watch again. Or else synchronization will not be so proper. That is how they started building their empire. Like that, Apple was successful. That much Samsung was not successful because Samsung ecosystem of phone is successful. Remaining all products are utter failure. Samsung tab popular. So who is using that? Student can buy and use it because cost wise it is lesser. But faculties like me can't use because every year I will change my iPad. Whenever new one comes, I will give back the old one, exchange, I will take the new one. Extra I will pay. That 70,000, 1 lakh, whatever extra is there, I will pay that. Remaining I won't. My intention was very clear to say, one decision of Apple to build an empire is continuing for a long period of next 10-15 years. That's a capital budgeting decision. NVIDIA's decision in 2019, capital budgeting decision. Listening, Copilot is there now. Have you heard of Copilot? What is Copilot? Who uses Copilot? Hey, which company is? Correct. Which company? Microsoft uses Copilot. For that, 2021 they started. Copilot started very much good in 2024. Now it is doing good. Like that, Gemini is there. Who made it? Google. On that, he only said, the CEO directly said that they started working from 2020, COVID time. These all are what decisions? Capital budgeting decision, because try to understand, AI won't be generated just like that. They spent a lot of money to create a data engine. We call it inference engine in information technology. Which engine? See, inference, not infrastructure. Inference means brain. Inference engine. Inference engine creation, they spend billions of dollars. What is inference engine? You watch the Robo movie. Robo movie, he will give connection. He will transfer the data to that Robo. Songs, movies, languages, dances, fights, everything he will load into brain. That's called as inference engine. Memory is zettabytes, he will tell. That memory is called as an inference engine. See, for a small Robo, you wanted to put that much. Worldwide, people are using AI now. ChatGPT, if you click what is cost of capital, what is KE, give me examples. It will give. And someone is telling them, the computer system, this data you should give if the question is like this, behavior. How much efforts they have kept, coding, debugging, pages and pages they spend, billions of dollars they spend. But today, people are using ChatGPT. Answer, OpenAI has become like anything. Next to 4-5 years, where it will go, people don't know. As far as I am concerned, next to stock advisors also AI will give in another 2-3 years time. And which stock to buy, which stock to sell. It can predict also how the price can move up and down. How this comes, AI will boom like anything. Definitely it will have impact. Why I am telling this now? So much of billions and billions of dollars company have spent on this. Today they are enjoying the fruits like anything, especially two companies here. One is OpenAI, second one is Google. These two companies are enjoying the AI market like anything now because they are only outsourcing to all other companies. Samsung has no AI, they are borrowing from Google. Apple don't have its own AI. Siri is not working that much well like other companies are working. Now they are going on an affiliation with the Gemini. Whether it will work in my system, it is already there. They included it as a trial version. Whether it will work or not, no one will know. Slowly it will come into picture. For Max, they release it now. Why I am saying that? They spent lakhs, crores, millions, billions to build a capital budgeting project. Capital budgeting project means don't understand machinery. Machinery is also one among capital budgeting. Capital budgeting means any kind of long-term investment is called as what decision? Capital budgeting decision. Capital budgeting decision are very, very clear. Capital budgeting decision means a decision which involves long-term investment. A decision which involves is called as what decision? Capital budgeting decision. Understood? One important point. So what are the features? 3 important features of a capital budgeting project. Popular theory question, please listen carefully. Number 1, long-term decision. Which decision? One decision will last for 1 year, more than 1 year. Long-term decision. Second, since it is a long-term decision, it is irreversible. It is means once a decision taken, it is like releasing an arrow from the bow. You can't again run and take it back. Over. Good or bad, you have taken a decision. Long-term decision. Number three, since it is long-term, it is irreversible. Since it is irreversible, any decision which is taken, if it can take back, you are not at a risk. But once you invest, you cannot take back money, means you are at a risk or not at a risk. Answer. Therefore, capital budgeting projects are very, very risky. These are the three features of capital budgeting. Tell me what is the first feature? Long-term project. Second one, irreversible decision making. Number three, since it is irreversible, projects are very risky. So once you take decision, at that time only you should think 100 times. Once a decision is taken, impact will be long-term, decision can't be taken back, and it is very, very risky. These are the three important features of capital budgeting project. Everyone clear? Please write down a short notes on that. 2 marks if they ask, you should be able to write number one. Write down the answer. Okay, write down. Point one. I need not write, you write down because I already have the notes available. So write down. A. Long-term decision. Underline. Just two lines in each point. Long-term decision. Long-term decision. Underline that, below write down. A. Capital budgeting decision is a long-term decision. Capital budgeting decision is a long-term decision. Second point. Since it is a long-term decision, since it is a long-term decision, impact lasts for more than 1 year. Impact lasts for more than 1 year. Impact lasts for more than 1 year. That's it. Second point. Irreversible. 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 Write down. Capital budgeting decisions once taken. Capital budgeting decisions once taken. Once taken becomes irreversible. Becomes irreversible. Capital budgeting decisions once taken becomes irreversible. Full stop. This is because it involves a huge investment. This is because it involves huge investment. This is because it involves huge investment. Okay, next. This is because it involves huge investment. Next. Next. In that only, next point you write down. Point 2. In that point 2, reversibility is possible only with a huge loss. Reversibility is possible only with a huge loss. Reversibility is possible only with a huge loss. Okay. Shall we? Next one, third one. Come out totally. Third point. First one is long term. Second one is third one. Risky. Hey, listen. First listen, after that you can write. See, why I am telling capital budgeting projects are very risky now. Most important risk element inside capital budgeting is, tell me, what are the columns in calculating the fair value of an asset? Source, that is WACC calculation. I am talking about fair value computation ki just now share pricing you have given that. Here, cash flow, PV at the rate of some percentage, PVCF. Correct? A problem comes here. See, PV at the rate, we can calculate KD, KE, accurate approximate, everything we saw. That is not a problem. With some efforts, we can calculate PV factor. Life also we can estimate when we are purchasing an asset. Problem is about estimating the cash flows. Estimating the, see, second column, whatever you are writing is PV factor or cash flows are. Loudly. Cash flows are all previous past cash flows are existing or futuristic. Nothing is real. We are all projecting the cash flows. We are all projecting and they are certain or uncertain. Uncertainty creates, that's why it's risky. Okay, right. Capital budgeting project is very risky. Capital budgeting project is very risky because it involves cash flow projections. It involves cash flow projections. Projection means what? Projection means what? Estimate. We don't know. We are thinking like that it can happen. Which involves cash flow projections. Which may or may not happen. Which may or may not happen. Which may or may not happen. Understood everyone? Done. So this is the features of capital budgeting project. Okay. Number two. Important considerations. It's the very, very important concept. Yeah, please. I want complete concentration of entire class. Important considerations in capital budgeting. Live students also, kind attention towards the concept. Because on this only almost every problem. Hey, listen, leverages chapter when we discuss what I said. What you need to understand to do any question in leverages. Leverages chapter beginning la. What you need to do income statement. Like that, this concept is important for capital budgeting. So listening or not listening is your wish. My point is, I need to give a word of caution before I start. So listen. What is so much important in capital budgeting? First thing, there are 1, 2, 3, 4, 5, 6. There are 6 important points in capital budgeting considerations. Any question you take, one of the 6 will come in exam. Any question you take, you need not ask me. You take any question in capital budgeting, one of the 6 or all the 6 or any combination of 6 will come. You understood what I said? On the basis of exam questions and pattern of questions tested in CSEMA exam, I prepared 6 points. Those are not coming in exam. Some things are coming in exam, from them I pointed out 6 points. Credit goes to the institute. And after seeing the pattern of questions they are asking in exam, I bifurcated entire capital budgeting questions into 6 types. Any question you take, it touches any of the 6 points. Either 2, 3 will touch sometimes only 1, sometimes all the 6 also. Yeah. So that much important this concept is. So please listen carefully. like income statement for a leverages chapter. Every question these points will come. Any one or all the six or combination, 2, 3 will come. First point number 1. Listen. Cash flows, not profits. Repeat. What is it? Not profit. I did not remember, therefore I am asking you, just give me an answer. Did I tell in the class difference between cash flow and profit in any of the introduction classes to you? Difference, why finance considers cash flow, not the profits? Did I discuss anything about it? Really? Directly or indirectly, nothing is said. Cash flow, if you count how much it will come. I think I sat here and said that example. Yeah, I will give example. Whether I said or not, you tell. Okay. Did not take any offline class also now. To maybe if I forgot. I said this example in your class, or maybe if I say example, you can remember. I said like this. I prepared a P&L account. Profit is 10 lakhs. I prepared a P&L account statement. Profit is 10 lakhs. I signed there. Audited statements. I prepared a P&L statement. Profit booked is 10 lakh. I signed on that. Okay. In live, I said that. Okay. For you, I did not. Somewhere I said the example. I don't know exactly where I said. That's why recently I told that. So anyway, 5 minutes example, nothing great. Listen. If you, sorry, please listen. If you see entire capital budgeting chapter, not capital budgeting, entire finance, you always see cash flow, cash flow, cash flow, cash flow. You will not see profits. Reason is, profit is always a non-quantifiable amount. Sorry, I will give an example. What is the first point here? Cash flows, not profits. Repeat. Cash flow, entire capital budgeting. Any question they give in exam, first check whether they give profits in the question or cash flows. If they give profits, you are in a danger. You should know how to convert profits into cash flows. For that, first adjustment. Are you listening? Question came in exam. Marks also you should not see. First, what we should see? Whether they gave in the question profits of the project or cash flows from the project. Cash flows they gave happy. Generally, they don't give because they wanted to make our life miserable in exam. Therefore, what they will give? Profits they will give. We have to convert profits into cash flows. For that, there is a procedure again. So, first thing is consider dash and not dash. I am repeating that. Repeat again. Consider dash and not dash. Never consider what? Never consider what? I gave you profit after tax from the project. You should consider or not to consider. Take it and convert that into what? Cash flow and calculate the answers. But don't take profits. Can I take profit or cannot take profit? Loudly. You can take only one concept. Accounting rate of return. Waste method in entire capital budgeting because it considers profits, not the cash flows. Which concept? Other name, waste method. Reason, it is accounts related. Accounting rate of return. Accounting consider profit. Finance never consider profit. Finance consider cash flows. Finance consider. Accounting consider profit. Profit is an accounting term. Cash flow is a finance term. That's why name of the concept is what? Accounting rate of return. In accounts that will be calculated. In that model only profits will come. In all other concepts in capital budgeting, what will be the God? Cash, not this. CA final, there is a separate chapter for one topic called as a free cash flows. What concept? Very lengthy chapter that will be. There also we will learn cash flows. Sorry, from today onwards, please keep in mind. Finance means what? Finance do not mean what? Even though you give me profit, what I will do? That for the first conclusion is a conclusion. Why, sir, you hate this accounting concepts and accounting policy? It's not because it's accounts. It's because of its assumptions. Insane way of giving estimates makes it more impractical in real life decision making. How it will be? Let's see. See here. Listen. Let us take two persons in the class. She will be one, he will be another. Let us take two different parties. Okay, take the last page of your notes. You also take the last page of your notes. Okay, I will tell one, two, 3 points. Randomly write down what comes in your mind. You also write down randomly what comes in mind. If anyone wanted to write also, you can write it. Don't copy. Huh? I didn't understand. You will write. Huh? You will write. No. I am telling something about accountancy. I don't know what you are thinking. Listen. Please, don't waste time. Please. Please, listen. She is CA. He is also a CA. Or she is a CMA. He is also a CMA. They are practicing. They are preparing a P&L statement for me. I am a client to both of them. Take independently. Now I gave data. I will give you the facts. You write down the answer properly there. Okay. No worry. I am not going to ask any tough question. Simple question. You have to take. There is a machine with me. People listen properly. Others also please listen. There is a machine with me. You will see the fun now. Listen. I have an asset with me. I am giving you facts. CA1, CA2. Fact is, I have a machinery. You have to calculate depreciation for that. Assume a life. Don't tell to me right there. Life. You also read. It's a plant and machine. 5 3 7 10 some number. Whatever comes in your mind. Life. You have written up. Some number of years you write. What you are writing? Just a life, some number. That's it. Okay? I completed up? Okay. Listen. Hey. Please. Next. Salvage value. Listen. I will tell. Write between 1 lakh to 5 lakh one number. Salvage value. You also. Salvage. You know the salvage value means scrap. Final scrap value. Salvage value. Some number between 1 lakh to 5 lakh. You also have written? Okay, done. Next. Depreciation key method you have to write. Either SLM or WDV. Some method. Written? Next. Stock valuation key. FIFO, weighted average. You choose one and write down. All correct only. These are all accounting policies. Any company can follow anything. You also. FIFO, weighted average. One thing you choose and write down. I think you can understand my example now. What will happen in some time. Okay? Listen. In my company, debtors are there. People are also becoming bad debts. You assume one bad debt percent between 1 to 5. You assume one bad debt percent 1 to 5. Don't write 1 to 5. 1% you have to write between 1 to 5. Some estimate. Okay, what? Have you written? Okay. Now let us see. More facts also not written. In this only you will see the fun. Listen. CA1, CA2. Both are qualified. Both are preparing proper P&L account according to the Schedule 3 Companies Act. Now let us see the fun. Hey, listen. What is the first question I asked them? Everyone? What is the line?
10.
Hey! Telepathy. So, listen. Telepathy, yeah? Listen. If everything matches, my example is. Tell, what is the second question I asked? Salvage. Between what and what I asked?
1.2.
No telepathy. Sir, okay. 2 lakh. Next question. Method. Which method? Next. What is the next question? FIFO. Weighted average. FIFO. Huh? Okay. Okay. Next. Bad debts. A person? 3%. Okay, now listen. That's it. These are the questions I asked you, right? Listen. Sir, listen now. Hey, listen, sir. Fact is, tell me now. She's a CA, he is also a CA. Preparing P&L, preparing P&L. According to Schedule 3, according to Schedule 3. Accounting policy followed by CA1. Accounting policy followed by CA2. Same, different. Loudly. Different. Correct? Both are wrong. Both are right. One is right and one is wrong. Both are right. Method of depreciation given in Companies Act. FIFO weighted average given in accounting standard. Correct? Bad debt is an estimate. Salvage value is an estimate. Which estimate? Accounting estimates these are. All are estimates and perfectly allowed as per AS1, disclosure of accounting policies. Hey, I am talking to you. When you are preparing financial statement, disclosure only required. And this CA1 has to tell in her books of when they prepare financials, she should tell clearly. Company followed before. Company followed before. Bad debt is estimated at 3%. Like that, what policy she considers, she has to write the notes. What policy he considered, he should also write the note. That's it. Disclosure of your accounting policies is the subject matter of AS1. Who is right, who is wrong, we are not to judge. Because everything is allowed as per accountancy. Listening, everyone. Now tell me. P&L statement of CA1 and P&L statement of CA2, both will give same answer or different answer. Everyone? Sorry. I will give you one small another example. Okay. With just 300 rupees you can understand. Nothing required. Sorry, okay. Tell me. Poor fellow, I am not thinking. Sorry, listen. Listen. Hey, listen. What is that? Sir, listen. Small, cheap examples. You give me 1 lakh, I will give 1 lakh example. Sir, listen. See, hey, listen. For example, listen. I give this. What is this note? What is this note? Both I will give to her. I ask her to count. Tell me how much it is. You tell. 300. For him I will give now. Tell me how much it is. 300. Okay. Now tell me, this 200 plus 100 is a profit or cash? Answer. How much is for her? How much is for him? Between both of them, answer is same or different? Because this is cash, that is profit. This is same across anyone, that is not same across anyone. Finance, that's why I always consider most practicable cash flows. That's why finance works on cash flow basis. Number 1 example completed. Everyone understood the first discussion clearly? Yeah, everyone? Tell me, that's why. Who is superior and who is inferior? Cash flows are superior, profits are inferior. If you are taking decision making. If you prepare P&L, cash flows and other things are not so required. Profits are more important there. Isn't it? But if you ask me, which is correct method means, because I am taking finance, I am not telling. Finance always supersedes accountancy in so many reasons. Reason shall I tell you? Finance never considers accounts. Accounts considers finance. That's why in accountancy, cash flow statement is there. Finance cash flow statement is not a surprise. Accounts cash flow statement is a surprise. Means what? Accountancy also know that profit is not a correct number. It changes from person to person. People wanted to know the real cash figure. Plus minus how much happened during the year. That's why they prepare cash flow statements. And even down the line, person who invented accounts also know that there is a nonsense inside this system. I'm talking with you, everyone. Understood the point clearly? Yeah. Come back to the point now. Tell me, cash flows versus profits. So who is superior? Everyone. Okay. 1 example I gave you. 3 examples. So 1 example completed. Another 2. Fastly, let us wrap up this concept. Tell me, PV factor made up of 2 elements. What are those? Loudly. Forget about opportunity cost. Talk about the second one. What it is? Very good. Tell me, gold is having inflation or not? Gold. Petrol. Gold has inflation. Petrol has inflation. Electronic gadgets have inflation. Tell me, Apple phone will inflate or not? Petrol will inflate or not? Gold will inflate or not? All the answers are wrong. Gold won't inflate, petrol won't inflate, Apple phones won't inflate, prices will inflate. See, Apple phone is having inflation, means Apple phone size won't inflate. Price cash flow to pay for that will increase. Petrol increased. Petrol inflated, means petrol, and next day 1 liter they will give 2 liters. Inflation does not mean that products won't undergo inflation. Product prices undergo inflation. Price is a cash flow again. Are you understanding that? Inflation can be applied to what? Not to the products. Profit is like a product. Cash flow is a cash. Cash is subjected to inflation. Okay? Like this, if I tell, people won't understand. We should come down and tell an example to make them understand. Super example ready for you. Listen carefully. See here, I will take a paper, prepare a P&L. I am a qualified CA. I will write for and on behalf of so and so company. I will sign R. Kaushik Mukesh. I will sign there. I will put my membership number, firm name. Suresh Siva & Co. Chartered Accountants, Hyderabad. I will put a stamp. I will send it to the ROC. Approved or not approved? Approved. Because audited by a qualified chartered accountant and signed, given, everything was done properly. I'm talking to everyone. So now listen carefully. What is my point? See, I took a P&L statement. I prepared everything. I signed. 10 lakh profit is there. How much profit is there? 10 lakh profit is there. Okay. Second example. I have 10 lakhs cash. Let us say this is a 10 lakhs cash. Now I have two things in my hand. I have a 10 lakh profit P&L statement, 10 lakh cash with me. With both of them, I went to the bank. First, I gave 10 lakhs cash to the bank. I said, please deposit this in FD. Immediately, he said, thank you very much. They took the cash, counted it, converted, they deposited. They gave me a slip. They opened on FD account to me and said that you will get 8% per annum interest on that. What percent interest? 8. Who is giving me 8%? Loudly. Bank is risky or risk-free? Even risk is not there. Why they are paying me? They are giving for opportunity cost of inflation. I told this in the basics of the FM class. Tell me, banks are paying for opportunity cost of inflation. Inflation. Opportunity cost is a risk. Bank is anyway risky or risk-free? Even when it is risk-free, why they are paying me return? Inflation. Listening? India inflation is says 8%. Example, it's not 8, 6.5 something. Let us take 8. They are paying me FD rate of 8%. Correct? Over. Second, in my left hand, what is there? P&L. How much profit? Loudly. I gave this profit and loss account also to the bank manager. I said, deposit this 10 lakhs also. He asked me where? There. Where? There. How much? 10 lakhs. Where? There. Sir, this is the P&L account. So what? Prepared as per the Board of Directors instructions, as per Companies Act, as per Schedule 3 Companies Act, audited by Chartered Accountant, sent to the shareholders for approval, filed with ROC, ROC approved, MCA documentation. Deposit the 10 lakhs and give me 8% interest also on that. Tell me, first 10 lakh cash ki interest will be paid or will not be paid? Loudly. Next deposit of P&L worth the 10 lakhs ki, they will pay or will not pay? Why? 10 lakhs audited, approved, filed, accepted by MCA. You pay interest also on the 10 lakhs. Now tell me, profit can be deposited or cannot be deposited? Answer. Return will be paid on return. KE return, KD return. Okay, will be paid on profits or will not be paid on profits? Will not be paid. Convert that into cash flow, I will pay you. So PV factor cannot be applied on what? Profits. That is another reason why finance always considers what? Like this, I can tell hundreds of reasons for that. At least everyone could understand the concept behind why cash flows and why not profits are. Okay, first point. I told you important considerations in capital budgeting. Really, I am telling you, if you understand this, half the chapter key, you will have clarity. Remaining half is only the problems. When we do the problems, we'll understand and solve. Do it. Write down. Cash flow versus profits. I will not take much time. Every point is 2 lines. Underline that and write down. Cash flow versus profit. Cash flow versus profit. Okay. Underline that, write down. Point 1. Finance always considers profit, cash flows, and not profits. Finance always considers cash flows, but not profits. Due to following reasons. Due to following reasons. Due to following reasons. Write down. Number 1. Number 1. Profits are uncertain, but cash flows are certain. Profits are uncertain, but cash flows are certain in terms of measurement. The cash flows also will estimate, but at least if it comes, it will be same in terms of measurement. Profits are uncertain, but cash flows are certain in terms of measurement. Okay, that is number 1. Number 2. Due to following reasons, like that we started, correct? In that, this is the first reason. Second reason we are waiting. Profits are based on accounting estimates. Cash flows are based on profits are based on accounting estimates and not scientific estimates. However, cash flows are estimated on statistical or scientific basis. Completed, everyone. Next one. Point number 3. To prove that, I will tell you one point. CA final, did you see a probability statistical approach? Syllabus I have shown you now. Those are all statistical methods to analyze the cash flow. Inter level that much is not there, but final level you will see. Cash flows also will be estimated out of lot of scientific research. Then only they will do that. Okay, those all comes at final, you can believe me now. Number 3. Return can be paid. RETURN. Return percentage. Return can be paid only on cash flows, but not on profits. Only on cash flows, but not on profits. Return can be paid only on cash flows, but not on profits. In the brackets right now. That means PV factor can be applied only on cash flows. PV factor has to be applied only on cash flows. Tell me the fair value calculation table here. Cash flow, PV and PVC. A PV factor you are multiplying with what? You got 0.909. You are multiplying with what? In the cash flow is there, then only you can multiply, or else you can't multiply. I will ask one question, you tell this. Hey, listen, I will ask a question, answer to this. Listen. See like this. Cash flows only will give the PV factors can be applied only on cash flows, but not on profits. PV factor, what are the 2 elements? Opportunity cost, inflation. Forget about opportunity cost. Talk about inflation. Inflation means rise in prices or fall in prices. Loudly. Profit computation, depreciation will be deducted. Profits, P&L profits, depreciation is an expense. Depreciation 1 year after another year will increase or decrease. Depreciation. 1 lakh is the asset value. WDV you are using 20%. 1 lakh into 20%, 20,000 is the depreciation. Next year, 80,000 into 20%. 16,000. The depreciation is reducing or increasing. And how PV factor you can apply on that profit? In that profit, depreciation is there which will deflate, not inflate. If you apply entire PV factor on profits, you are also taking inflation on depreciation. Understood? Allowed or not allowed? Because of all this nonsense, they avoided completely accounting profits. Understood? Decision making accounting profits are not useful. So anyway, first point completed. The cash flow sources profits is over. Correct? Next, point number 2. Over. Come out of that point till point 2. I am writing. Later we will discuss and we will write. Okay. See, in the notes, it was given as consider cash flow but not accounting profits. Okay. Next one. Cash flows versus incremental cash flows. Cash flows versus incremental cash flows are a very, very important exam questions, for 10 marks are coming on this. Learning objectives, miscellaneous you read once. Learning objectives, the contents of capital budgeting chapter, miscellaneous topics you read. First one is what? Incremental, other concepts. Other concepts, what is the first one? First, that is the incremental cash flows. Learning of incremental cash flows we will do here. Problems we will do in the other concepts. Listen, what is the significance of incremental cash flow? Please. Listen. So, what is this incremental cash flow? Listen. Companies, whenever they take a capital budgeting decision, purchase of a very big asset, capital budgeting decision. Purchase of a plant and machinery, capital budgeting decision. Constructing a new project, capital budgeting decision. Hundreds of capital budgeting decisions they will take in a company. Correct? See here, I will give you an example. If this academy, purchases a very big camera worth 5 lakh, is this a working capital every day buying and selling decision? Capital budgeting decision, 5 lakh working decision. Answer? Because once a camera is bought, they will use it for at least the next 7 to 10 years. 100%, no doubt. They will use for minimum 7 to 10 years. Or else waste of time, investing 5 lakh rupees on a camera. So minimum 7 to 10 years is the usage life of a camera. Now listen carefully. My question is, will camera gives more appearance to the class or not? See, I will give an example. First day of the class, this big camera was used. I felt that is not good. I said to them, I will bring my camera. Recently, when I went to USA, I bought this camera, this 50 camera. But that's a 4K resolution. That's called as an OBS-bot. It is manufactured by one company called as OBS. OBS software will be there. Streaming software. If you are seeing on the screen, this is because of a software called as OBS. That same company manufactured a webcam for their streams. So this is a perfect for these classes. This is AI powered. I am not using in the class. If I move here, it will also move along with me. So that's AI powered. You can search on YouTube also. OBS-bot, OBS BOT. That's called as OBS-bot tail. India it is available at 80,000. US it is same is available at 48 or 49,000. So that's called as OBS-bot tail. They claimed it as it's smaller than Apple iPod. Apple AirPods are there, na? They claimed it as this is smaller than Apple AirPods. Like this, if you keep the Apple AirPods come up till here. This is much smaller. But it projects the viewpoints in a better way than that of a 4K camera because that's 4K power. My point is, I invested on that. That is my capital budgeting decision. Like that, they purchase the camera. Say for example, that is 4 lakh. That is also a capital budgeting decision. Now I will ask a question. Tell me. I have a portable monitor. Okay. I have my iPad. Worth around 2.5 lakh. This around 20-30. Keypad, all these things. Eventually you are seeing is around 8 lakhs. Okay. So because Mac Studio, if you see online, it is somewhere around 4 lakh 65 or 5 lakh now. So, but that's a beast. Not a normal beast. You put whatever number of videos and stream it online. It will work seamlessly. Normally when you put the Windows, it won't work that much seamlessly, but this works like a beast. Never disappointed me in the last 1.5 years. Keeping aside promotion for Apple, they don't even pay me 1 rupee for the promotion. If they pay, I will tell every single day. But my point is, this all requires somewhere around 8 to 9 lakh rupees of investment. I will ask one question. My camera, Mac Studio, monitor, keyboard, trackpad, iPad, Apple Pencil, okay, coolant below the CPU, and DJ mics, all these put together will generate cash flow for me or not? Loudly. Yes. Now, super question I will ask. Now, I wanted to know, or I wanted to buy, for example, Apple monitor. But that's very big, we can't bring here. In my office, I am using that. For example, if I wanted to buy an Apple monitor here, it's around 180 something now traded in the market. If I buy that, that will be the only asset. One among the assets are. Loudly. Now you should answer my question. What is the value of any asset? Yes or no? Now tell me. This camera will give how much cash flows to this academy? This projector, how much cash flows it will generate? Present value of future cash flows. Discounted required rate is the value of asset. How much this camera give me revenue? If my revenue per month is 25 lakhs, how much is this camera giving me? Let us say monthly revenue 25 lakhs. 25 lakhs. So monthly revenue is 25 lakhs. Really also 25 lakhs minimum will come every month. Month 20 lakhs if you take on an average. How much will come from this camera means how can I tell? No one can tell that. But without that my classes can't run. Listening, huh? Tell me, in your entire monthly revenue of 25 lakhs or 30 lakhs or 35 lakhs, whatever will come, how much will be for the iPad? How much cash flows iPad is generating me? From this, at least you should understand one point. Independently, no one can value assets sometimes. This Mudiglani Miller I wanted to tell. Mudiglani Miller said that value of an asset is present value of future cash flows, discounted at required rate of return means for every asset you can't quantify sometimes. I will ask a question, tell me, how many of you paid fees that air conditions are there in the class? How many of you paid fees that benches are there instead of chairs? How many of you paid fees that there is a projector? If you really say that, yes sir, I joined because projector is there, your cash flow is directly coordinated to the projector. But if ACs are not there, you won't join. In reality, if projector is not there, where you will see? 2 days you will come and after that you will ask refund and go out. Benches are not there, where you will sit? Means benches is one of the reasons why you are sitting in the class. AC is one reason you are sitting in the class. Projection is another reason you are sitting in the class. Faculty is the main reason you are sitting in the class. I know that. Isn't it? But how much because of this particular asset means how can I tell? That's why Mudiglani Miller for the first time said to the world that don't value the assets independently. You are seeing AC, you are seeing projector, you are seeing camera, you are seeing iPad, you are seeing monitor, you are seeing benches, you are seeing projector, you are seeing a board, you are seeing all these things. Mudiglani Miller calls this as ICOM Chennai project. He won't see this as an asset. Each asset ki no value will be there. All put together generate cash flows. You understand the point clearly, yeah? How he said that changed the entire world in such a way that he was given with the Nobel for his unique thinking process. Till then, people started thinking like that. I will ask a question, tell me. Camera key, camera is there now? Now tell me, what is the value of the camera means present value of cash flows in future generated by the camera, correct? Answer. Icon collected fees. Let us say 60,000 is the fee. Listen, in that 60,000, how much of our camera means can anyone tell? Because of camera, 3,000 or 4,000, no one can tell. And future cash flows you can tell, cannot tell. Loudly. Therefore, capital budgeting also changed its way of understanding the concepts because of Monique and Miller. You know what they said? See here. Shall we? There are 1, 2, 3 machines are there in a factory. What are they? Machines. How many machines are there? Input will go into first machine, goes into second machine, goes into third machine. Manufacturing finished product will come out. What will come out? What will come out? Manufactured finished product will come out. See, my company is in manufacturing of shirt. Everything is mechanized. Manual process. First I will put a cloth. Input. Cloth will be cut into pieces as per the design instructions given by the computer. Cut pieces will go to second machine. Stitching will be done in the second machine. Third machine, labeling, ironing, shaping, everything will go. Fourth, directly third machine after output will come out, shirt or pant. Can you visualize the example clearly? There are 3 machines. Raw cloth is going. Cut pieces came to second machine. Attached and made into almost 80% cloth. Next to say everything is stitched, branding is given. Final product is coming out of the machine. Clear? Now tell me. Finished product once comes out, what you will do? Please, sir, answer, sir. Use this and answer. Finished product will come. What you will do? Sale. Sale is a cash flow, correct? That means all the sales from that particular machine, finished output, if I can project and discount it, that will become the value of those 3 machines together, correct? Everyone. So tell me, what is the value of these 3 machines? Present value of future sales. Present value of. Instead of calling future sales, I will call net sales. To purchase the cotton cloth, I require some money or not? Sale price 1,000, purchase cost is 200, expenses another 200, 600 can I call it as a net revenue? Tell me, 600 into 1 crore units I will sell every year. 600 crores is my future revenue, everyone. If I calculate present value, I will get the value of these 3 assets together. Now you tell me, because of first machine, how much cash flow? First machine has 0 value because it will just take that and cut into pieces. No one will wear pieces. Second machine will join everything and put it as a 70-80% ready. That also no one will wear. Branding, everything was done properly, came out. That will be worn by people, correct? Only first machine to no use. Only second machine to no use. Only third machine to nonsense. But all the machines together generates that revenue. Correct? Now independent asset valuation is possible or not possible? Possible. Loudly. That's why Monique and Miller call this as a project. Don't call individual assets. Call it as a project. That project has a value. That project a capital budgeting project. Capital budgeting, the same concept is incremental. See, this much of discussion, why you should first have in your mind a clarity. Now answer my question clearly. How many machines are there in our example? X, Y, Z, 3 machines are there. Correct? Now, company wanted to replace Y machine. X, Z are proper. X is what? Raw material will be taken. Shaping and cutting will be there. Correct? Joining time, lot of delay is happening because of machine Y. And for each trouser or for each shirt, it is taking around 20 minutes. New machine is there in Japan. That machine, 1 minute, one particular trouser or a shirt, it will make ready. Now, instead of manufacturing 1 crore units, I can manufacture 5 crore units or not with that speed. Answer, yeah. So, company wanted to replace entire project, 1 machine. Loudly. Everyone. Now tell me, please answer to the question. With all the three machines together, how many crore units will come out? Normally with the three machines, how many units will come out? 1 crore unit will come out. With that new machine, let us say 1 crore 50 lakhs will come out. How much will come out? We answer. I am removing which asset? X or Y or Z? Y. Replacing it with A. Instead of X, Y and Z, X, A and Z will be there now. Because of that, extra profits came. Now, I wanted to value only second machine now. Which machine? Just now we discussed now. Just only second machine is there now. Cutting will be done. Then who will do that? The grandfather will come and do it. Without 1, 2 is a waste machine. Without 2, 3 is a waste machine. Without 3, 1 and 2 is waste. Answer. So can I value only asset Y independent, asset A independently? I cannot value. Therefore, what they will do na? Incremental. What is incremental? Sales with old 3 machines. Sales with and which 3 in our example? X. Sales. Compare. Sales with XAZ. XAZ. Tell me. In our example, what is the sales with XYZ? 1 crore units. What is the sales with XAZ? That 50 lakh will be the value of the new machine. Incrementally we will value. Separately when you can't value, how we need to do? With you, without you, you should do. With you. Listening, huh? Organization also have people. You should not make them to go out of your organization. If they go out, they will take value also along with you. But organization sometimes loses people. After losing, they will feel very bad. I lost this person. But at the time of losing, you should understand that. When these people come out, they will not just come out with handshake. They will come out with huge fan base. Everyone. It's a loss for you. You should apply basic common sense. So, what will happen when these people comes out of that, along with the person, value also will come out. Therefore, what is the value of that person means what we should do. Without him, with him, what is the value? Without him, what is the value if you count? A balance the value of that person. Common sense also if you don't know. Hey, everyone understand? Nice. So, hey. Listening, everyone understood? Listen, very important. Write down. Life lesson number 1. Incremental cash. Right. When a dependent project is taken, when a dependent project is taken, when a dependent project is taken, where independent assets don't have a value, where independent assets don't have a value, where independent assets don't have a value, independent assets don't have a value, we cannot quantify cash flows of that machine. We cannot quantify cash flows of that machine separately. Cash flows of that machine separately. In that case, we calculate. In that case, we calculate incremental cash flows. In that case, we calculate incremental cash flows. Okay. Problems when you do, you'll get more clarity. The concept you understood. See, listen. Please listen. When I wanted to purchase a machine which itself generate revenue, you can value that asset directly. Example, I am having a Xerox machine. Xerox machine, yeah, photocopy machine. I purchased it. Now I wanted to purchase another Xerox machine. I wanted to know the fair value of that. Now what I need to do? How many copies I can sell per day? How many copies I can sell per year? What is the life of that particular machine means? Let us say Xerox machine life is 10 years. How many years? 10 years. Each year it will generate me, say for example, 6 lakh revenue. How much? 6 lakh. Now 6 lakh for how many years? 10 years. I will calculate present value of that 6 lakh for all the 10. No. Annuity 1 to 10, 6 lakhs. PV annuity factor we can calculate. We get a value that came to, say for example, 14 lakhs. How much? 14 lakhs. Now I will see the cost of the Xerox machine in the market. It's only 10 lakhs. Happily I can buy because I am getting a value of 14 lakhs of an asset which is worth only how much? 10 lakh in the market. Take a decision. Now incremental you need not calculate because that particular machine itself can generate independent cash flows. Listening? Like that this camera can't generate independent cash flow. Without this my classes can't be conducted. But I can't value the value of that camera. For example, online class fees is 5,000. In this 5,000, I have a lot of costs. Books will be there like that. How much for the camera means I can't tell. But without camera, without seeing me, how can they listen to the class? This is very important. But I can't exactly tell in my fees of 5,000 how much is for the camera. No one can tell. Then I should value everything as a project and then you have to tell the cash flows. I think everyone understood the logic clearly. Yeah? Modigliani Miller said. Good investment opportunity, I did not give the meaning. But meaning of the project according to Modigliani Miller, I said. Okay. Next one. So, what you have written? Cash flow versus incremental cash flows. Completed? Very good. Number three. Cash flows should be considered after tax. Cash flows should be considered after tax. Cash flows should be considered after tax. Should be considered after tax. See, what is the meaning of this? Listen. Please listen. Accounts, incomes, expenses will be there. Correct? FM, nowhere you will see the word income, nowhere you will see the word expense. All incomes are called as inflows, all expenses are called as what? Outflows. It will change. Tell me. All incomes in accountancy are called as inflows in FM. All expenses in accountancy are called as outflows in FM. So we don't have expenses and incomes. We are having what? Loudly. With some basic knowledge you have, I have a liberty to ask one question. Do you remember cost of capital chapter, interest treatment on taxation? Interest is a deductible expenditure or not a deductible expenditure? Loudly? It will give tax payment or tax saving. Loudly? For company, interest is an expense or income? Answer. Inflow or outflow? That gave tax saving or tax payment? Same concept I wanted to tell. In finance, in capital budgeting project, all outflows will lead to tax inflows. Repeat the statement. Everyone not answer. Start again. All inflows will lead to tax outflow. Merge both the statements and tell. See, I will tell this. All outflows leads to tax inflows. All inflows lead to tax outflows. Simple statement. Start. I will show you an example numerically. You will get convinced with that. See the screen once. See, please, everyone. Sales 100 minus cost 50. Okay, profit 50. Profit? Forget about variable fixed. That is not our intention. We are not doing leverages now to break up everything into two parts. That is not our intention now. So therefore, I am directly going into the point. Sales or cost to profit. That's it. Sales, cost, profit minus tax. Let us say there is 30% tax. How much? 30. So how much it will be? 50. So earnings after tax is how much? 35. Please tell me what happened in this case. Tell me. There is a tax payment. There is a tax receipt. In this case, there is a tax payment, a tax receipt. There is a tax receipt, a tax payment. Loudly? Wrong answer. Both are there. See there. See there, see there. I know what you will see. I know what I will see. You will see this 15. I will see correct numbers there. See here. What I said, repeat the statement once. In capital budgeting, all. Very good. Very good. Now listen. Put your ears, mind in this class for some time. See there. Sale is an inflow or outflow? Sale is an inflow or outflow? Therefore, it will result in tax inflow or tax outflow. Just now you said a statement, you don't remember. All inflows will lead to, all outflows will lead to, sale is a, should lead to 100 into 30%. 100 into 30%. 30. Outflow na inflow na? Sale is a, results in, how much outflow? Very good. Next, how much is the cost? Outflow na inflow na? Outflow na inflow na? Outflow. Every outflow will result in, answer, 50 into 30%. How much? Loudly. Inflow na outflow na? Cost is a, results in tax, plus or minus. How much? Plus 30, minus 30 plus 15. Minus 15 came here. Some people. Overaction is a simple concept. See there. Tell, what is the statement I said? Repeat now. See, some people, all inflows will lead to tax inflow. Both inflow name. Because nothing is going inflow. Start. All inflows will lead to. Hey, some people are telling all inflows lead to outflows. All inflows lead to outflows. All inflows lead to tax outflows. Start again. So instead of every time, see, there can be so many inflows and outflows. Every time for inflow, tax payment, outflow, tax inflow, I can't take net amount directly, we will take on the profit. Profit, if you are applying the tax, profit already takes the revenues and the costs. Net you are applying the correct, and already you are applying tax saving on outflows and tax payments on inflows already applied. That's how that 15 came. Everyone now convinced with the concept clearly? Yeah. Right. Point number 3. Yeah. In that one line answer only. In finance, all outflows will lead to tax inflows. All outflows will lead to tax inflows. You are asking me to repeat na? Super. Super. Normal super illa. What a negative reverse one. Where a level. I repeated 10 times before that. What As the Einstein theory I am teaching you. Opera bittu. Write down. Now I forgot what I said. What I said to you? All outflows I said. For the first time you listen to the class. Thank you. All outflows will lead to reverse. What? What? All inflows will lead to she will never ask doubt again. Genuine doubts also she will please ask doubts. Fun. Take it on a lighter note. Sir, okay. Hey, have you written our statement properly? Repeat the statement one last time. All outflows will lead to all inflows will lead to net is represented on profit taxation. Profit if you tax, you are both taking both. Okay, that's right. That's don't worry. Point number 3 or 4 or 5 or 4. Right now. Hey, very, very important. Mark this important. Very, very important. Depreciation adjustment. Depreciation adjustment. Sir, with this I will close, but please listen carefully. Depreciation adjustment, very, very important. 99% of all questions will have this adjustment. 99%. 1 or 2 questions like a depreciation, not that means don't shout on me. But 99% of all capital budgeting projects are capital expenditures. Every capital expenditure may have depreciation. Talking to you, sir. Therefore, depreciation is a general adjustment in every capital budgeting question in exam. Please apply your mind and understand. Depreciation is a cash flow, not a cash flow. And a real cash outflow, not a real cash outflow. What is depreciation? First tell about it. What is depreciation? If a person asks now, what you will tell? Depreciation means called as depreciation. Tell what is the depreciation of the asset. Depreciation means of the asset is called as depreciation. See, depreciation means general loss of value on an asset on usage. When you start using an asset, you can't expect to have a same value, it will fall. So fixed assets will have depreciation. Which assets? Intangible assets ki depreciation concept is not there. There is no concept of depreciation intangible. There is a concept of amortization. And very discussion. It is no way concerned in finance. Amortization is an accounting number again. It's not for finance. So asset has a depreciation. Asset has depreciation. Depreciation is an important adjustment, not because depreciation is a non-cash item, because income tax will allow the tax deduction for the surprise part. Normally, income tax won't allow fake expenses. Fake expenses means what? They are allowed in accountancy, but not allowed in taxation. I will give an example here. Outstanding rent. Tell the accounting entry. Accounting entry also not required. What you will do in P&L, you tell me, that's all. Outstanding rent. What you will do? Oi. That also will do. Direct entry. Direct entry. Hey. Even if you directly enter, basic should be there. No? Sorry, listen. Listen to this. P&L account, please. Bonus is there. Bonus, provident fund has to be paid. But you did not pay for a month outstanding. So I will tell answer also. Outstanding expenses are charged to P&L account only. Means as if we have paid, we will charge to P&L. And really paid or not paid? By we follow accrual basis of accountancy. Which basis? Accrual basis of if something belongs to that year, we will put it in P&L whether or not we paid. Year la how many months will be there? 12 months ki 12 salaries we have to pay to our employees. Answer, sir. 12 times we have to pay bonus. 12 times we have to pay PF for 1 month. Last month, March month, I paid in April. But March month, we have to prepare balance sheet. By that time, I paid or not paid. Outstanding, we will show. What we will show? Outstanding means what? Paid or not paid. But that belong to that year or not. Even though you paid in April, you paid April bonus. March bonus paid in April.